if I write out this word right here, I'm just gonna write my name. Does this show up like backwards to you guys, or do you actually see my name? It doesn't show up backwards to y'all? Okay, that's wow. Okay, see, that's why I was tripping, because this whole time I'm looking at myself and I'm like, why is it backwards? I'm trying to see if there's something that I need to do on my end to switch it. That's what I look like. Okay. Damn, I'm chopped as fuck, bro. All right, anyway, cool. I just wanted to know, like, that's why I was tripping. All right, fuck this. All right. That's literally all I was trying to figure out this whole time, bro. I'm over here trying to be like, bro, what the, you know what I'm saying? So anyway, but yeah, I have a whole whiteboard. I still haven't set it up, but I'm gonna do it today. I'm not gonna allow myself to do anything until I actually get it set up. It's a 6-foot whiteboard, and I'm gonna have it just like literally on this wall. Well, it's not on the wall, it's on wheels, but you know, I'm gonna have it behind me. And I'm gonna start giving like lectures standing up, like I'm an actual teacher, professor, whatever the case is. Wear an all black or all white t-shirt, keep it simple, because the whiteboard is what's gonna be important. So anyway, like I was saying, I'll just do it like this for now. So the most important thing, let's just recap where we're at. Some of you guys were here and you listened to Rio briefly. Some of y'all weren't. I took a couple of notes, but Rio touched on something that I decided that I was literally doing just the past hour before I joined his live stream. And he talked about overconsumption of information, information overload, and just how bad that can be. And so, funny enough, like first of all, I synthesized information in my mind, about my life and what direction I'm going. But then I also decided to do the same thing on the chart. I sat down, got something to eat, and I started to ask myself, what is the most important piece of relevant information that has been relevant 10 years ago when I started trading, relevant in recent years, relevant today, and relevant tomorrow. The point that he was getting at was that, first of all, when we consume a lot of information, sometimes it can lead us to distorted, well, that was my input, but lead us to process recent information over relevant information. And that was, I like the way he worded that. And so like how I was saying just briefly, when you have a lot of information coming in, you might, intake distorted realities, distorted information. You might intake illusions or figments of your imagination, and then now you're starting to process those and figure out how to react to that, as opposed to real information, relevant information. So that's one. And side note, that's typically what a new trader, retail trader does, is based on the finite or the lack of information, and combine that with them reacting based off what they see right now. That's why retail traders lose money. That's why they get faked out, right? Me, myself included, like it's right. So that's the clarity there. And so where am I going with this? I said in chat that overconsumption can be catastrophic. or we can consume to a point until it's catastrophic. And that information is supposed to be synthesized. We get taught that in college, at least, but as well in high school, but heavily in college. You synthesize information. That's what you get paid to do. Say like if you're a data scientist or you're crunching numbers or whatever, you synthesize everything down. You boil it down. And what I was offering in addition to that is, in the process of boiling things down, we need to boil things down to the most simple version of completion, right? Because I forget who corrected me, but I was saying like distilled water, right? It doesn't have minerals in it. I said purified water, now I'm gonna say distilled water. But it's like, it doesn't have any minerals in it, right? You drink distilled water and it saps you of the minerals that are in your body, because there's this process called diffusion that exists, where we take things from a high concentration area to an area of low concentration. So even that right there, right? All of that is relevant information. Me explaining to you that process, how you can break something down from from distilled water, explain why drinking distilled water isn't bad, even though we need water, and you break it down from relevant topic to relevant topic to relevant topic, right? It went from diffusion up to why it's bad for us to drink distilled water, and vice versa. There's a clear pathway or a clear road to progression. Now, that is what I have done for so long when it comes to this trading thing. If you keep asking the question why, eventually you land on the why. But the issue is just like children, adults, we understand that why is a never-ending question. You can ask why forever, right? And then you can debate on why and create factions and schools of thought and perspectives and blah, 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 at all various levels of detail, right? We might say, why is the world the way it is? Like, that's the question that we want to start off with. And then we say, well, the answer to that is this, but the answer to that is this, and then this, and then this, and then next thing you know, we're talking about gas prices, right? Because that's where we're at in our discovery or our questioning as to trying to boil things down, break things down to answer why is the world the way it is. But if I stop there and I tell you, oh yeah, well, the reason why the world is the way it is because of gas prices. It doesn't make any sense, right? It doesn't make any sense at all. There's not a direct correlation. Once upon a time, there was no such thing as a gas price. So explain why the world was the way it was. And so those arguments are arguments that me personally, I tend not to put any weight on, because they don't withstand the test of time. They haven't been relevant through past, present, and future, or through the various eras of time that we have had, right? And so when that's where I get stuck, whether it's emotionally, cognitively, mentally, traumatically, relationally, financially, whatever realm I get stuck there is usually where I don't tend to have peace. And so I continue to try to search, right? So now, there's a reason why a nigga bald headed, okay? Look at me, I'm so chopped right now, right? That's my life. Okay, I do that shit in every realm of my life. So when it comes to trading, this is just one of those. Okay, but this is what I figured out today, and what I'm going to continue figuring out. It started while I was eating, and it's going to continue here in front of you all, because maybe it might help. Those of you guys know I studied economics in college. And in college, they taught us this one thing. It's like the most important thing. The most important economic lesson you ever learned. And there's countless. There's two schools of thought when it comes to economics. It's the number crunching side, and that's what people think of when they think of economics. But then there's a philosophical side. Economics was originally composed of a lot of philosophers coming together to have discussions of literally trying their best to answer questions such as, why do people make the choices they make? Like, why? What is right and what is wrong? Should we really incarcerate or throw this person into jail or the dungeon because they stole food for their family, because they're poor? That's where economics came from. That's where it derived from. Modern day economics, there's no more humanity in modern day economics. There's actually a group of economists that are out there that wish that they could bring back the humanity, I think it's the ethos, but the compassion and the humanity back into economics. But as far as modern day economics goes, and this is across both micro scales and macro scales, the most important economic concept is literally supply and demand. Now, some of y'all are probably like, bro, really, you did all of that just to tell us about some damn supply and demand, bro, for real? Like, there's hella niggas talking about supply and demand. You said I'm backwards now? I don't know why. Oh, well, no, I know my screen is backwards, but if you actually watch me, it's forward. I know that's crazy. So yeah, this is why, like, the whole recording is going to be botched. But if you look at my camera itself, I shouldn't be backwards. I don't know why it's backwards for me. Okay, so yeah, so probably don't watch my stream for this segment. But anyway, it's supply and demand. Supply and demand, economically speaking, it is the thing that determines what price is going to be. So when we're on a chart and we're looking at whatever asset we're looking at, regardless of what you think, I don't care what you think at this point in time. I don't even care what I think at this point in time. Reality suggests supply and demand is the thing that determines price. There's nothing else. The issue becomes, how do we interpret this? That really becomes like the big point of contention, right? There's so many different, not even schools of thought, but there's so many different ways and scales that we can see supply and demand. And only if you knew some of the stuff that was out there, like order flow tools and whatever the case is, and like if you had a very raw understanding of what the market truly is and what it's composed of behind the scenes, not just the candles on the screen, you would be entering into, for a lot of you, it would be information overload. I'm gonna just be honest. If you are built that way to handle those nitty-gritty, raw component level details and build up something great, then that's the route you should go. But for the majority of us, it's information overload. My economics professor, he taught me, he said that, Romel, do you really know what your job is? Like, the one thing you need to be able to do to really be a quote-unquote economist or to get a job in this profession with this degree? And I was like, what? He was like, you need to be able to communicate complexity to children. CCC. And I think that I don't think I've done the best that I could do in this arena, because I think at some point, I got tired of communicating complexity to children, and I started I started acting like I was communicating to adults, right? But at the end of the day, there's an inner child in all of us, right? So stuff needs to be simple. He says that my job is to take information and synthesize it and be able to communicate this to children, okay? He said, once you're able to do that, you will never go a day in your life without a job. And I'm like, bet. So this right here is what I'm going to attempt to do. I'm not saying you guys are children, but I'm going to keep this in mind when I get to the chart. And I'm going to talk about this right here. And I'm going to give you a children-like perspective of this. Are we ready for that? Because this is, like I'm saying, over the course of my 10 years of staring at the charts, this is the most important thing that I have, the most relevant and the most important thing that I have ever seen on the chart. If you are an ICC trader, or you want to keep it simple, like ICC simple, I'm going to show you from a, don't even matter the time frame, I'm going to show you a simple approach, regardless of time frame, on how to use supply and demand if your goal is to trade ICC. I think this right here is going to even help me. This is, some of you are going to see it before, and I am going to talk about sentiment, but I'm going to talk about, okay, bet, I'm done talking. Start showing it. Anyway, so we're on a chart, right? Let me go ahead and turn my camera off. I don't need to have this on no more. First thing that we need to figure out, or not figure out, but like, okay, I'll do it like this. What to keep in mind. That supply and demand determines, how do you spell that? Determines price. Like, that's literally all we need to do. Now, what do you guys think the next natural question is to ask? I'm just curious to see who's with me and who's paying attention. That's all. I just don't want to feel like I'm out here by myself. What's the next, what do you think is the next what is the next important question to ask? If we need to keep in mind that supply and demand determines price, we need to know okay, someone's getting close to it. Someone said current price, that's part of it. But narrative, okay, what's narrative? How do we find supply and demand? Okay. All right, these are very good questions. So like this one right here, how to find supply and demand. Let me go ahead and write this one down, because that's exactly what we're going to talk about. But the next natural question, in my opinion, to ask, and tell me if you guys agree, What prices are important? If supply and demand determines price, what prices are important? Right? That's exactly what Rio just got done talking about. Relevant versus unrelevant information. Information overload. And he had touched on putting weight on prices. Well, what prices are important? Because if we don't answer this question, then we can, and I promise you it's possible, we could literally see supply and demand in action on every single level every second of the day. So it doesn't narrow it down. So the issue with this question is that this is heavily subjective. That's the only issue with this question. This is heavily subjective because a lot of people think a lot of different things are important. So this is where I'm going to offer, I want to put that disclaimer out there. I'm about to offer you something. It doesn't mean you have to take it. Have some type of autonomy and control over what information you hear and what information you find relevant. All because Romel is saying it doesn't mean that it's going to be useful for you. But I already told you I'm trying to keep it simple. So, since the general consensus has been and will probably continue to be that market structure is very important, I'm just going to say our answer for now. Is market structure. Then now the next question is, how do we find supply and demand? What do you guys think the answer to this question is? And just, people may not understand what market structure is, but this is AKA swing highs and lows. And it doesn't even matter if they're internal or external either. Because it literally swing highs and swing lows. Okay, cool. So, yeah, how to find supply and demand. This right here is where I'm about to make it extremely easy. This right here is what's going to make it very beginner friendly. But I'm curious to see what your guys' answers are. How to find supply and demand. Keep in mind, we're talking about market structure. And I'm just curious. I want to see how you guys are thinking. So someone said, what area did something such as break highs and lows and efficiencies where large liquidity is, where we are on the current price, seeing where we came from, places. Okay, Quinn, you're very close. Very close. Is it being recorded? Yes, Damar. Places had a large displacement where price makes its biggest move, where market structure shifted. Very close. I'm about to show you how simple it is. All right, bet. Look, here's how simple it is. Okay, everyone, what price are we trying to analyze? I'm literally pointing to it on the screen. I didn't even spell structure right. Hold on. Not current price, market structure. let's take current price, past price, whatever, all that stuff out the equation. We are trying to analyze market structure. We are choosing to say that that is what we are considering important price levels, right? That those price points, external highs and external lows, like we should understand market structure. Highest high of trend, lowest lows of trend, and so on and so forth. You want to know market structure, right? Okay. I'm going to give you the easiest way on how to find it. The supply and demand areas that are important. Are you ready? Swing points that create an external high or low? Yeah. It could be external or internal. It don't matter. That's why I left it out. It doesn't matter. It's all of market structure. Swing highs and swing lows. The easiest way to find it, that's it. Mark out a high or a low and look left. That's all you gotta do. That's like the easiest thing to do. Because right now, like I said, this is supposed to be ICC friendly. This is what I'm getting at. I'm making it ICC friendly, and I'm keeping it simple, right? In here, you're going to also have confirmation. So simple with confirmation. Something that you don't hear from me. Like very rarely do you hear me say like, wait for confirmation, wait for a close, all that kind of stuff. But low key, lately, if you catch one of them continuation trades, I'm gonna show you how to catch it. This one small addition makes low key ICC, quote unquote, the way Sai has taught it, as simply as it is, or just whoever has taught it, I don't care. Mike Lito, you want to call it impulse correction continuation, or impulse correction confirmation, indication correction continuation, I don't know, it don't matter. Break and retest, breakout, whatever. This type of trading, here's how you do it. You actually don't analyze market structure. You analyze the thing that the market structure reacted to. That is how you make it, like low-key, very foolproof. So, what am I talking about? Let me show you guys an example of what I'm talking about. I'm on a 1 minute chart. Literally doesn't matter. Where was I at? I forget exactly what time frame I was on when I saw this on my phone. Or I think I was looking at NQ. Was I? Or was I on a 15-minute chart? Or was I on a 1 hour chart? No. Well, what was I doing? All right, it doesn't matter. Let's just start finding examples. So, point is if we are looking at the market, right, and we want to say, okay, you know what? That's a swing high. That's a swing low, or whatever. Like, literally, this right here is a swing high. It doesn't matter. Like, that's what I'm trying to say. It could be external, internal. All of these are highs in the market. Like, that's a high, major high, huge wick on it, right? So that stuff is still relevant. That's a huge swing point. All this right here, these are lows in the market. That's a low. That's a low right there. All of this, super simple. All of this. You want to figure out how to analyze. This is all you have to do. Mark out a high, and then look to the left. Because guess what? Do you think these highs and lows get created for no reason? No. They get created because fundamentally supply and demand dictated what price should be priced. So if economically speaking, we know that supply and demand determines price, all we have to do is look at the price points that we call important and figure out what determined those. That's really it. So if this is a high in the market, all I got to do is take that, look left, you know, this is whatever, and you just go to the left and you find the literal demand, the demand or the supply area that determined this high, and you go mark it out. So keep in mind what we're doing. We're marking out stuff after the fact. This is not the same as me teaching you how to catch the highs and the lows of a trend anymore. This is me teaching you how to react when those ranges are broken. Okay? So we go over here and I start looking. Where is my supply and my demand? Now, this is where you need to spend your time practicing and training your eyes to see it. Who sees it on this time frame? Raise your hand or type yes in the chat. It's overlapping this line right here. Who sees it? The lower high? Nope. Like, if I mark out all of this, did the high of market structure tap that? No. All right, Mello says the candles. What about the candles? Okay, yeah, exactly. Yeah, actually, that's a good thing to say. So DeMar typed the balance. That's what we're looking for. When I say supply and demand, we're looking for an area of balance. I don't care about the imbalances. I'm looking for an area of balance. But yeah, Mello says the candles. Gotta read to see them. Yes. This right here, if you want to study something, go study candle range theory. Go on YouTube and study candle range theory. If you this helps you see it. What we're talking about is we have to understand that every single candle has a set of highs and lows. So watch. Like, this is a low, high, higher low, higher 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 high. Wait a second. Higher low, lower high, then higher low, then higher high, higher low, higher high, and so on and so forth. So now, do you see where the discrepancy is? The discrepancy is right here. Why did everything change right here? From this high to this low. And then we traded inside this particular range for an extra candle. We stopped the sequence of higher high, higher low, and it all got interrupted. The only way this got interrupted is if for some reason, as soon as price made this high in the market, sellers were present. Sellers were present enough to cause the market to trade internally for price to make a lower high. There's something about this price level, this particular level right here, that caused market suppression very briefly. And this, right? So, teaching you how to spot it. Because over here, there's nothing left for us to really analyze. Afterwards, price coming down, price made high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and lower low. Nothing really out of the ordinary here. So where is the quote unquote BIR? And specifically what I'm trying to ask is not even about the pattern, but where is the rebalance happening, right? So this is just a side note. However, if it's hard to see, you can always scale down your time frame. Okay, so let's just go down to the 1 minute chart, since that is what most people are gonna do. I would say check out the 3 minute. Never know. But let's go down to the 1 minute. And then let's go look at it. There, now you see those sellers. You can fix everything. Drag this over to the right. And we can see in fine detail what happened. So point is this is where, for some reason, sellers stepped in very briefly, enough to keep the market suppressed for another 5 minute candle. And then we came crashing through it all. And the point is all you have to do is go back and look for where this high reacted from. Okay, now keep in mind, I'm not trying to teach you right now at this moment in time. I'm not trying to teach you how to scope out these highs. I've already done enough of that. Let me teach you how to just understand what this high reacted to. Okay, if you're gonna spend your time waiting for market structure to form, like it's taught commonly and widely out there, and you need to track your highs and your lows anyway to figure out direction, or if you want to trade from a higher time frame or higher scale perspective, here's the easiest way to do so. Wait for the high to get formed, wait for the low to get formed, and then if they break, don't base it off the actual high. That's what retail traders do. Base it off the zone that created the high, because that's the zone that has to get flipped. You're gonna get way more opportunity by injecting that small piece to the equation, that little bit of tolerance. You're gonna get a zone. You're gonna understand where the high is. Okay, cool. But look at all of the tap. Look at the retest there, the rejection, right? And then lastly, look at that reaction there. It didn't come down to market structure, but it came down and tapped the zone though. Now, for those who know, we know. That price could be reacting off of something back here, right? Or whatever the case is, but still, look at that, okay? So, that's like one example. What I'm gonna do now is I'm just gonna go through and I'm gonna start showing you example after example after example after example, right? So let me see. Let's go ahead and look at this high, okay? Let's go back and figure out why this high is here. Okay, it's pretty muddy. You wanna know what you do with stuff that's muddy? You don't try to clean it up. Mark the whole thing out if you want to. Or you can actually dissect it a little bit. So if it's this area, what you can do is understand, this is a little bit too big. We gotta clean it up. My bad. So, but here's the way we clean it up. It's simple. If market structure is market structure, then that means this right here is also market structure too. It means that this is also market structure too. So what is my point? We can just mark out the area that led to these highs being made to begin with. And if we do so, we would actually end up getting something like this. If we want to verify that for ourselves, nothing says it's against the rules to scale down and look for it. You want to mark this out. There's your area of balance. There's your supply area that is responsible for this. If you want to include the high, which I would recommend we do because it's the high of the whole region, I would try to just make sure I encompass the majority of this, a range that explains both this and everything in the future. So that feels about right to me. I don't have to take it down this nitty gritty. I don't need to be like, oh, that wick is so important. I don't need to leave information out that's not that's still relevant and only encompass this, because now we still have, like, technically speaking, if price broke this high, we still have another target to break until we break out of the whole area. So when it comes to information, the best way you keep it simple is by keeping it relevant. Is that high relevant? Yeah. Is this area relevant? Like, does it look relevant? Okay, if I mark it out that way, I get 50%, 50% at that imbalance, and then this reaction is happening here. Okay, cool. Does that still speak to what has happened later on? Does that explain why we're suppressed here? Yeah, okay, cool. Then I'm good enough, right? Let me switch time frames. Does it still make sense? Okay, yeah. Oh, you know what? I'm marking out a candle. Okay, cool. Like, and then just leave it like that. Try your best to keep it as relevant as possible, not as detailed as possible. Okay? The more relevant you try to keep it, the more you'll start to learn the nuances and the details later. You shift to your time frames, you look like, oh, okay, cool. Maybe if I see this again in the future, I might understand what I'm looking at. Okay? So then my point is, well, this area of what? Supply dictates this high, this continuation to the downside, or just this trend following through to the downside. It articulates why price rejected here, and then it articulates the flip that happened, and then the correction and the retest. It's relevant. This is a relevant piece of information. Let's just keep doing it. Let's do it again. There's highs all down here. If market structure is the piece of structure that's important, then okay, bet. Here's market structure. We don't have to concern ourselves with this anymore, okay? We don't have to concern ourselves with this. Watch this. Okay, price is making a lower low, lower high, lower low, lower high, lower low. Ooh, higher high, higher low. Okay, bet. Watch this. You wonder why people are not trading ICC properly, is because just we haven't broken it down far enough. If this right here is the model, okay? And by the way, I'm not throwing shade either. I'm just being helpful. If I was throwing shade, then I need to throw shade at myself also, because I taught this, because it is relevant. Here it is, right? This is my username on TradingView. This is my ICC schematic. This is what I learned. This is what we all kind of think how the market acts. Well, I have a higher high. I have my higher low. And I'm supposed to enter when we go back above that high, aren't we? And I'm supposed to suspect that at least if this interaction happens, I'm supposed to at least be able to suspect that my first high is going to be my first take profit and that price might continue. Okay, so now this is in my notes. You want to understand how come I started to veer away from the simplicity of ICC? Because look at what just happened. That's an ICC setup, quote unquote. Granted, though, what would people say? People will say, well, man, you're on the 1 minute time frame, so no wonder why this trade didn't work out. You would get in here, stop loss goes here, and then you would be able to suspect that this is going to be your TP at least. And sometimes it just doesn't happen, and then next thing you know, you're like, holy crap, right? So then what else do you know? Well, Romel said that if I do get a lower high and then we come down and we break the low, then now that's a downtrend. So now you're in here like, bet, price is gonna continue down. And we're like, all right, cool. But now you have to have this stop loss here, right? And no one wants to go for anything less than a 1-to-1. So to make this a 1-to-1, that's about right there. Let's see if we get a 1-to-1 out of this. Damn, we don't even get a 1-to-1 out of it. Holy crap. So now that's another failed trade. Why is this happening? Right? It's not because we're on a low time, or it's not because we're on a low time frame. It's because of what we're choosing to put weight on. When you're on a higher time frame, you don't have to contend with all of this noise. But to trade a higher time frame like this, keyword like this, with this approach, the ICC approach, you need to have patience. And you need to have a very high level of risk management. You need to be willing to lose because, bro, are you gonna lose? Like, you're gonna lose a lot. Okay? Because it's just not gonna play out like how you think. So what could have saved us? What could have saved us is understanding what areas made the high to begin with, and understanding that this area of supply represents the area where the suppression exists. It's not based on the highs or the reflection of market structure after the fact. It's always been based off the areas that create the market structure. And that's one of the major nuances. So now, check this out. Price goes up. And now we can start taking valid trades, right? Well, Romel, no, we can't, because couldn't this just be considered a lower high in relation to this whole trend? You're absolutely right. It could be. So then what do? You wait for a retest, and then you read the candles in the moment. And if this is your perspective, if you trade the lower time frames, if you trade futures, or whatever the case is, like, you can't hold trades. So this is how you start to execute. And when you see supply and demand areas getting flipped, that means everything. Go ahead and catch whatever move you need to catch, and then call it a day, right? Before you got the confirmation, you already had a higher low in the market. This area got tested multiple times. I've taught you that when an area gets tested multiple times, it becomes weaker. It was created for one, then it was tested once, twice, 3 times. I've never heard 4th time is the charm. I heard 3rd time was the charm. Third time was not the charm. Third time made a higher high. Third time came down and went back up, like, and then broke it. There's no such thing as fourth time is the charm. Take the trade. Click the button. Because what you're doing here is you're putting weight on the literal principle. You're not putting weight on market structure anymore. Where is it? You're putting weight on the principle. You're putting weight on the application of the knowledge of what determines price points. And the answer is supply and demand. And so now, depending on what price point is important to you, and like I said, this case study is market structure. Look, all we have to do is analyze the areas that create market structure. So this is very laid back, very chill, very passive, very boiled down, very synthesized, very I don't need that much more information. Very you know what you need to know to actually put this in practice low-key and start hitting trades. This is very risk management friendly. It tells you what zones to look at. It tells you what price to look at, or what price zones to look at. You should learn how to read candlesticks. You should learn what an order block looks like. You should learn how to perceive market structure. But now you don't have the anxiety of trying to figure out, well, will this be a high? Or will this get broken through? Why don't you just wait? Why don't you just wait and then take the flip of these areas, right? And then if you know what you know, then you can go ahead and say, if you understand and you're able to perceive, well, this is my first overall time in market structure, externally speaking, not internally. Okay, this is all inside information. You know, this is like little weak moves. If I know that this is my first time where I have an entire trend, aka a tier 3 range, right? Something that looks like this. Coming all the way up here. To tap this for the first time, yes or no? Does this right here, does this test feel a little bit different than just the market coming up here to go down? This is a major journey that price has just taken to an area that's just suppressed price. And so now, when you're ready and when you feel confident enough to start getting in on the creation of highs and lows, because, hey, we know that supply and demand is the thing that determines price anyway, and the prices that we're analyzing are market structures, swing highs and lows. Not only can you just wait for these areas to get flipped and take a simple trade, track your market structure, ICC, you can start to dictate when some of these areas are going to get tested and reacted off of in major ways. And, you know, and you can garner your confidence however you choose to, because it's being rooted in the principle itself. Oh, look, it just got flipped. Okay, bet. Oh, wow, look at that. It's going to buy. Okay, well, there's another one. Okay, I see market structure is there. So now I'm going to wait. I'm not taking this sell. But what I will do is happily take a buy if it ever gets flipped. But for right now, it stayed upheld. Okay, this area just got flipped. Maybe, well, it just got flipped again. I don't know what my rules would be right now to be like, oh, like, what happens if you had an area that was there, then it got flipped, and then it got flipped again, and all that kind of stuff? Use your discretion. Be smart, okay? What my answer is always going to be is, if you want to keep levels on your chart that you feel like are key, then you can do that. But, like, you would be like, oh, well, Romel, this is a BIR, right? And yeah, you would be right, but did it uphold? No. So then what would be my answer to this? My answer is going to be the same answer that I always give. Relevant, up-to-date information. As soon as this zone got flipped right here, I'm deleting it. I'm done. It's not relevant anymore. We already went up to it, reacted off of it. Now we flipped on it, retested it, and bought up. Now we've done just one too many things. The market is about break and retest. So here's a retest. That's okay. But then here's a break, and then here's another retest or correction, and then it goes up. So okay, that's retest, break, retest. Like that's, once again, third time's the charm. A little, like, too many things have been done here for me to put weight on this. But no one is saying that I can't update my chart. And that's what I would elect to do. If this doesn't confuse you, then keep it on your chart. But for me, I like information on my chart that's being tested for the first time. Or the second time, no more than that. So, for example, I would come in here and be like, bet, let's delete this because this is not relevant. I'm telling you, this is how simple it is. Let's just say this is where the market is. This area back here, all of this stuff has been ran through. It's not worth anything anymore. It was relevant when it was relevant, now it's not. That high, this area is still relevant. Why? Because it's just been respected. We didn't break it. So it's still relevant. But let's go ahead and get some fresh information, right? Because we have highs and lows everywhere. So what highs and lows are important to you? If you've noticed, I've been marking out tier 3 ranges or tier 4 ranges. Okay? Meaning that I've been looking at highs of trends. I could go down and start looking for highs of ranges and all of this internal information as well. But I'm going to get to it. But let's just say we want to figure out why is the market rejecting right here. All you got to do, put a line right there. You know, I know this is tedious. Yes, I know I can just put a horizontal line. This is for teaching effect. Go to the left. What does it hit? Do you see it? If you did the candlestick reading, here it is. Cool. And like, that's literally it. Like, that's really it. We could do this on smaller scales. We could say, okay, well, that's cool, Romel, that's one scale, but how did we go from selling to buying? Okay, well, look at the market structure. No one's stopping us from being able to just mark all this stuff out. There's one high. There's another high. There's another high. I have one-on-ones in the past where I taught you, yo, if you don't know what you're doing, just mark out highs until something makes sense. Okay, hold on. Something starts to make a little bit of sense. I know I marked out all these highs, but for some reason, this one down here seems important. Okay, well then now you've already located the highs in the market that are important. Congratulations. This should be really easy to do. What are those highs reacting off of? Well, what am I supposed to do, everybody? I haven't read the chat in a minute. What am I supposed to do once I find highs that in the market that are important? Draw a line out. Look left. It's a cliche in the trading space. If you watch old market structure videos, they don't say it that much these days. I haven't, it's all ICT, it's all complicated jargon, but I'm teaching it to you. I'm teaching market structure to you from the perspective that I learned, with the verbiage that I learned like mixed with the relevant information that I've learned. They said, look left. What do you think I do? Like, look at all of the videos that I mark out. I look left. I stay looking left. But the only reason why I'm looking left is because I'm figuring that whatever I'm looking at right now is important. So if what we're choosing to look at is market structure, and we think something is important, marking it out is not just good enough, because look, this is what it's going to get you. If you only mark out the market structure, watch. Price just made a lower low, right? Look, because let's think about this. Let's think about ICC. Hold on. People don't know how to track their market structure well, is what I'm trying to say. I've been getting on people's case about this for a long time. There's going to be a lot of people. Angel gave a talk on this, but there's going to be a lot of people that understand that, okay, market structure did this. There's going to be a lot of people, though, that will view market structure like this. With multiple different paths is what I'm saying, okay? And so, from the perspective that you might have, you're trying to learn how to mark out market structure. You're trying to do this because we've taught you that, oh, the market is all about, which it is, but you have to perceive it at the right scale, and that's been hard for people to do. That's what I've been trying to teach people how to do. To perceive the information at the right scale. Right now, I'm bypassing and I'm shortcutting through all of that, right? Because for a long time, it's always been about lower lows and lower highs, or it's been about higher highs and higher lows, right? But now, which one? You know what I mean? Which one is important? Is it the blue line or is it the red line? And how do you know? And that's why that's where this comes from. Where I say, okay, well, you gotta understand that this whole thing is a bullish range. That's comprised of a bullish range, a bearish range, and then another bullish range. So there is a scale of information inside the information that you're perceiving. And that's where all of this comes from. And I've been trying to get you guys to be able to spot this, but it's becoming difficult. Because this is what I would say, hey y'all, if price actually does go, if it goes down and it breaks this low right here, I just want you guys to be very careful about trying to take any trades that you see, because you have to take into account that price is still gonna be inside of a bigger bearish range, a bigger bullish range, even though we're breaking lows. So what do? You have to make sure you quote unquote look left. And if we're still inside of a bullish range by technicality, after we break that, then you gotta take that into account. All of this is just hard for people to do, right? It's hard for people to have these eyes to be able to spot this alpha and omega right here and take this as a buy opportunity. It's hard for people to understand that, well, price is rejecting. Look at these candles. Look at the rejection wicks. Did price close below the wick? Yes or no? No. So then these candles are respecting the rejection that's here. And so what have I been doing? I have been giving you the answers. I'm not gonna lie. I've been giving you the answers Like literally the answers. But it has caused a lot of information overload. So now, look at how far away we are from what really matters. We're over here trying to figure out if the market's bullish or bearish. We see it coming down. I'm trying to get into this trade down here, and I might be losing money in the process or entering bad in the process, blah, 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 blah. Because granted, it takes a level of confidence, it takes a level of experience to be able to just execute like this and to read and process this level of relevant, detailed information. I've met so many people who are great traders and they cannot read candlesticks. They don't trade on a candlestick chart. Like, I had a mentor once upon a time that said, oh yeah, no, candlesticks, I can't read them. But she's a trader. So then it must mean that in some way, shape, or form, they might not be that relevant. So it depends on your perspective. Because, like I'm saying, this is so subjective. What prices are important to you? So like I said, I'm giving you something that's going to be super easy. It can start you off, and maybe this is where you can live. You might never need to hear my voice again on some real shit. But if what is important to you starts to change, which it sometimes does, the longer you trade, the more accurate you want to be, the more money you want to make, the more you want to understand the market, naturally, sometimes. So if information starts to change, whatever you start to see as important, if that starts to change, I just gave you a framework on how to go back and reverse engineer whatever piece of information that you are deeming important. How do you think I came up with this shit? Or like develop this school of thought to start calling stuff Holy Grail and Alpha and Omega and BIR and blah, blah, blah. All a nigga do is be like, okay, if I want to learn how to enter there, how do I do that? I draw a line at that price point and I look left and I do that over and over and over until I find something that makes sense. The answer is always one of two things: supply and demand. And I'm gonna save this for next lesson. This is really what I'm gonna be talking the majority of my teaching career when it comes to trading on. It's always been sentiment. And if you know, you know. Okay, yeah, dude said volume. Low-key, sentiment and volume. That's just like extra, yeah, cool. Sentiment and volume. But if you want to keep it simple though, just do this. Because now look at all the information that you can sort of synthesize or unlearn. Look at everything that goes away. This 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 goes away. Even Alpha and Omega goes away. Well, I mean, not really. If you wanted to figure out why is this low here, then this is the order block, right? So that it technically stays. But for the sake of this, let's just call it a gray box. Let's not put a name on it since the names are so confusing. It's a demand area, okay? All you gotta do is keep looking left at your market structure, and when we break the area responsible for the structure, not the structure itself, look at how led astray you might have gotten if you were analyzing this as a break of structure or something, okay? Yes, I'm on a 1 minute chart, but now what if this was a 1 hour? What if this was a 15 minute? This stuff happens up there too. A high time frame fake out or medium time frame fake out, it happens, okay? Analyze the area that creates the structure, wait for those areas to get broken. If these highs are important to us, we look left. Take that line, drag it to the left. Oh, what do you know? I know we've been staring at it this whole time, but I just had to prove some points. But there it is. Now we have everything we need. Literally. Literally. Yes, this is being recorded. We have everything we need. What determines price, everybody? What determines price? Supply and demand. Okay, bet. Guess what this is? There's supply. Then guess what this is? There's demand. Do we have everything we need? As far as economics go, as far as the concepts go, do we have everything we need to determine where price is going to go based on how it reacts in these areas? Exactly. Economically speaking, yes. Conceptually speaking, yes. What do we have marked out by showcasing supply and demand? We automatically have the areas where market structure is. So that's covered. Awesome. What else do we have accounted for by analyzing supply and demand areas? Lows, highs and lows, yeah, but where market structure shifted. Okay. Maybe. I'll give you half a point for that. Wow, okay, yeah, order flow. I didn't even think of that one. Okay, so watch this. Let's go ahead and create another thing somewhere over here off on the side. And I'm gonna make a list of everything that you have, like all of the bases that you have covered simply by analyzing supply and demand. So from this perspective here. All right. So OCD about this. All right. So what bases does supply and demand cover? So for one, we have market structure. That's the obvious one. We don't have to think about it anymore. Once we see it, mark out the area that's responsible for it. We don't even gotta think about market structure. The bases are covered. Highs and lows, we're good. The second thing that's covered, I mean, it literally is like supply. Well, hold on. It's like, yeah, I'm gonna say like supply and demand itself. Supply and demand itself. Right? But someone said order flow, and that's like legit, like by accident. Low-key by accident. Someone says balance in the market. I'm gonna go ahead and say it this. The reason why the market is balanced. right? The reason why the market is balanced. Because balance, aka consolidating, no trade zone, all that stuff. The reason why the market is selling and why the market is buying. So like order flow, like all these are going to be like a lot of the same answers, but in simple terms, right? Because I'm supposed to be doing what? Communicating complexity to children. So basically, what we have marked out here is where sellers are and, or both, where both buyers and sellers are. Simple, right? So that's how we start analyzing order flow and different things like that. We know that there's sellers up here. We know that there's buyers right down here. Boom. Like, so many things are getting checked off the list, but the one that I was waiting on is this one. Premium and discount is also checked off the list too. Where is this area? It is like, you know what I mean? That's as premium as you can get. That's as discount as you can get. There's literally like nothing else you can do. Like so many things are getting checked off the list. If you want to add a nuance, what do you think the nuance is going to be? Especially for those people who have been studying under me in priority. What do you think the nuance is? There's only one that's coming to mind. If you want to add one nuance, one important nuance, one relevant nuance, because all of this stuff is being taken care of for you. All of these nuances here, low key, are being taken care of for you. What is one nuance that isn't necessarily taken care of for you that you want to figure out? Okay, two narrative. Okay, cool. So narrative is definitely one of them. But what for those of you who don't know, what he means by this is let's just call this market direction, right? Market direction, right? Is which area is likely to have a reaction, like market direction. So specifically high time frame, bias, okay, market direction. Okay, there's actually two more nuances. Like literally, wow, this is such a good video. I'm like giving you guys everything that constitutes to a full-blown A+ setup right now. Like not even really realizing it. Let's delete this high right here. You don't need that. There's two more nuances here. Let me give you a hint. One of them is higher time frame, one of them is lower time frame. But they're both in the same category. DeMar says indication. The current cycle is in. Y'all don't have no more guesses? Y'all just waiting on me? All right, DeMar. What do I say is necessary in order for the market to indicate? And in order for the market to break out, the market has to be Okay. Okay. All right. Let me go ahead and sit here for just a hot second because a lot of people said imbalanced. A lot of people said balanced. It can't be both. But no, there's no crash out. There's no crash out. Let me, let me just explain to you this. This is gonna be one of those videos that you should legit like log and save and go back and rewatch, okay? The market has to be balanced inside the range, okay? In this area right here, the market has to be balanced in order to create an imbalance away from the range. The market has to be balanced in order to create an imbalance away from the range. Okay? That's how this works. So if you guys are thinking that the answer to the question is like, okay, like what is necessary in order for the market to break out? The answer is yes. You need an imbalance to take you away from this area of balance. But in order to trade away from this area, you need, okay, hold on. In order to trade away from this area where we have supply here and demand down here, the market has to be balanced in this area before the breakout. In order to trade away, no, wait, hold on. Man, I'm confusing myself. Hold on. I have to find a way to word this. That's not gonna cause me to go in loops. This is getting very unchildlike. All right, bet. Let me just show it then. There you go. So, and let me go up a time frame. Watch. Let me see. I know this is where it's like this is where the maturity starts to kick in. This is where you go from like, okay, I know my ABCs and I know my basics. So that's why I'm saying these are nuances. These extra details are not necessary for everybody. But I'm just drawing the connections while I'm here. So it's a very full video if these details become useful to you. If they're not useful to you, then you can go ahead and tune out. I'm not saying leave, but just tune out for a second. The market has to be balanced to break out. What does that mean? Every time the market made a range, it had to go back and rebalance itself. Okay, we made this area, then we made this area. The market had to go back to rebalance itself. Or whatever, like the market has to be balanced in order to break out. And then yes, an indication or imbalances is the sign that the breakout is happening. But the reason why this becomes important, let me see if I can go find a quick example of this on the chart. Like, okay, watch. So imagine you found yourself, I actually know where there's an example of this somewhere. Happened a couple of days. Okay, is it here? It might be here. This really is going to come into play when you get very long, drawn out areas of consolidation like this. Okay. And this nuance is going to help you with timing. If you don't care about none of that stuff, and you specifically don't care about getting in at better prices inside a consolidation area, then low key, you just go ahead and wait. You wait for the supply, like I'm suggesting, like I've been talking about for the past hour. You wait for that to get broken, and you just call that a day. You don't need to know anything else. However, there's a lot of people who are going to look at the rest of this money down here getting left on the table, and they're going to be a little concerned about that. But the point that I'm trying to make is that there's a slightly simple way to determine when this breakout is even going to happen. So if you would want to get in, say down here somewhere, you'd actually be able to do so. And the answer to that question is just understanding that the market is balanced, right? Like, for example, right here, let's just say if we already know the market is going up, right? And we would be enticed to want to take buys because of what we see happening down here as far as market structure goes. Well, yeah, price came down, and guess what? It double bottomed, basically, okay? Then it trended up, and now we have a higher high. Then we came down and made a higher low. Then it went back up, made another higher high. What would a lot of people do? A lot of people would be saying, oh man, look at the way the trends are trending, because that's what I teach, don't I? Yo, we're going up, bro. And people might start taking buys right here. Right? People might start taking buys up here even. You have people who do this. These are perspectives, and I'm assuming that you're not exempt from being one of these people that make a mistake. Okay? Like, so how can you understand that it's not the time for this? By asking yourself and assessing, is the market balanced? And the answer is no. First of all, we're not up here just yet, but the market has to come back down and successfully rebalance every trend and range that it creates. Okay? So check this out. At that time, the market was up here. And we'd be thinking that the market's continuing. But the market only came down to tap in or rebalance this high. The question is if we tracked our market structure, if you watch all of my old videos, this is the same stuff that I would teach. From this high, price came down and made a low. Then we made a lower high because it is a swing high, it's a swing point. Then we made a lower low. Then price went up here, however you want to draw it. Didn't break that high yet. Came down, then went up. And then if I check candle by candle, you tell me, when did the market ever elicit an opportunity for this piece of market structure right here to get retested or rebalanced? In other words, this bearish range that broke this bullish range right to the left, and this area right here, did this get retested? Did it get tapped? Did it get rebalanced? Or is it still just left hanging? Are the sellers here like, yo, y'all for real? Y'all not gonna give me a chance to get out? Oh wow, that's crazy. Once again, does it make sense for the market to buy while it's still in premium? This is where the market, all of this stuff, these nuances start to explain to you why you shouldn't drink distilled water. It's my whole point. We're studying diffusion, literally. the concentration of orders and of buyers and sellers, it's too heavy up here. Buyers don't even want to buy up here. They want to buy down here. And sellers who were here, they're waiting for their time to get out, and buyers low-key want price to come down so they can buy at a discount. Do you want to buy something that's not, like, what would this be? Do you want to buy something that's 5% off? Or do you want to buy something that's a little bit more along the lines of 60, 70% off? So that's what we're getting at. Okay? Is it at enough of a discount? Who cares about what this number is? Like these fib levels and all this stuff. I got one that's just based off of actual percentages. 10, 20, 30, 40, 50, 60, 70, 80. That's just to give me an estimate. Okay, bet I'm getting somewhere around about a 70% discount. That's good enough to me. Right? So that's what I'm getting at. So I'm teaching you diffusion. I'm telling you why drinking distilled water is bad. In other words, I'm telling you why taking the buys up here and basing your information only on market structure is going to usually lead you astray. Because technically speaking, this is called what? Demand. And what do we know about supply and demand? It determines price. And do we have market structure down here? No. So is it time to buy? No. So then you understand that you have to wait until it gets proven that it's going to be an area that price is going to buy from. Now you could look here on this scale, start to understand that, okay, bet prices come down and it made a low, a lower high, a lower low, and it's looking like it's going to want to go up. But what else do you have here? Check this out. You have market structure, don't you? Well, you know what I mean? I can just go ahead and mark out the very thing that market structure is being made off of. There it is. Bet. Oh, wow, we just closed above it. Oh, wow. So you mean to tell me I can just press the buy button right now? Because we just tapped into higher time frame demand, which was one of the nuances, or higher scale demand. Like a demand that's based off a larger move. We just tapped into demand. Now we're waiting for price to break the supply, because technically speaking, don't we have everything that we need? Don't we have a supply and a demand level? Aren't these the two things that determine where price is gonna go? So now we have low time frame supply, or small scale supply, larger scale demand, in a major area of interest for market structure, or whatever the case is, these lows that we're down here at. We got supply up here. Like, we have targets, we have everything that we need to understand that, you know what? It's quite reasonable and hold on, overall increase in demand via higher lows in the market. That's what this is supposed to represent right here. That's an increase in demand. These higher highs are representing a increase in demand, right? So now our analysis of how the trends are trending, higher high, higher low, higher high, okay, it's reasonable to suspect market about to go up. And what do we want, but where is our targets? What are we analyzing? Are we analyzing market structure? Or are we analyzing supply and demand levels? In order to get to market structure, we gotta break this supply. So there's another one. Hashtag be the best music. And so you just go ahead and you wait. You literally have enough information to take these trades, right? Now, like I said, this is ICC, right? Or ICC friendly. So this is an example of like, okay, well, we got in early, or rather you understand, we already understood market direction before we even went up there, because we know how to track supply and demand. Or you could have waited for your overall indications, corrections, and then you could have waited for the continuation. You could see how this same area upheld, right? Got the tests, right? You could have understood that, but now your stop loss, where's the stop loss going to go? That's what everyone is saying. Stop loss is supposed to go underneath the lows. Now, granted, I'm on a 15-second chart with this shit. Granted, you know what I mean? But when you get supply being flipped in a very clean way, right? That's all you gotta wait for, right? The market structure was a little muddy here. It came back for a double bottom. Price never closed below the rejection of the candle in the demand area. So this is representative of where buyers stepped in. All of these are little nuances and little things that I be teaching, because it's kind of important. If you need to monitor your trade, you need to know if your trade is still active, if buyers are still in control, and when they're not in control. So there's a lot of extra stuff that comes into play with you being able to monitor your position and whatnot. But it is as simple as this. Just marking out these areas and then waiting for price to react nice and clean, being patient, right? For all of my candlestick readers out there, and you know what I teach and all this kind of stuff, you see it. You see that buyers were here. Boom, solid, a lot of confidence. Wick sauce road. This wick, we made it. And then we came back and corrected back inside the range of the wick, and then we continued outside of it. That's wick sauce. That's ICC. First form, or wick sauce first form, literally. You understand? This is where sellers were. And guess what? We closed above it. So we indicated above, came back and corrected inside, and then continued above. Wick sauce, second form. This wick got respected, this wick got disrespected. My old bio used to be a long time ago, price can only go in two different directions. Price can only do two things. It can either respect a level or break a level, and I'm gonna teach you where and why. That was my bio for a long time, for like the past 3 years, and then I think I changed it sometime last year. But that's all it ever is. Price is either gonna respect a level or break a level. I'm gonna tell you where and why. I'm telling you where and why. So forgive me, I just got a little bit complicated. Maybe one day I might learn how to explain this like you're a kid, but for right now, I'm gonna explain it to you like you're in high school. Okay? Because these little tiny nuances, they're not the hardest to get. I'm telling you to mark out a big wick, because size matters. That's really it. Understanding that this is also technically red, and this is also technically green. Because those are supply and demand areas too. So now we have it on multiple scales. You have true supply and demand areas as far as structures and order blocks go. Now we have them at the component level in the Wicks. And all we're doing is we're waiting for these nuances. We're waiting for this stuff to happen, and then we're solid when it comes to timing. And we already know targets. They're just more supply and demand levels. Will the market have a reaction, or will it keep going up? It chose to keep going up. Did we see that in the moment? Yeah. First of all, it traded above it, so that's one. Two, it chose not to continue, so it chose to leave this imbalance in the market, and that's necessary for price to continue going higher. But was the market balanced overall? No, because this imbalance is here. So because this area exists, I don't think that the market's going to trade away in a very significant manner. Sometimes it does, but I would suspect that the market would try to slide back down and capture this area at some point. And then, okay, bet, it's going to leave it behind. And that's this right here. Everything that I just said in these past 10 seconds, that's basically what I want you to stop doing. That's what I'm going to try to stop doing. So I'm going to stop trying to forecast the market that much. The market been told me it was buying. I had targets. And every time we break above or below a supply and demand level, that's all I really need to know. I don't need to try to continue to forecast that the market has a desire at some point to come down and tap into this area, because who knows when or if it'll do it. Most of the time it will at some point. But I can't tell it when to do it. There are imbalances that have been left behind on charts, gold, NAS, silver, forever. Look at all of these gaps in the market that still are just there. Do you want to know when they'll get filled? When the market crashes. So who knows? My job is not to try to predict that. My job is supposed to react today based on the relevant information, and what I'm trying to say is the most relevant information that determines where price is headed is and has always been supply and demand levels, which are areas of balance, which are areas of fair value that get flipped. It's just that, okay, everyone is like, Romel, bro, there's order blocks everywhere. Which one do I mark out? I just taught you how to reverse engineer it. Look left, mark out your highs and your lows, and then look left, and that's the order block that matters. Stop, since trying to figure out when sentiment shifted and which order block is the one that's gonna get tapped and retested, and all that going on, and how to snipe the high and the low of these trends, let's just go ahead and wait, and then just wait for them to get flipped, or wait for them to get respected, or something like that. And then really what I'm saying is wait for them to get flipped, because isn't this the trade that everyone is trying to take? I mean, really, isn't this the trade that's actually stress-free? A little bit. What time frame am I on? All right, 1 minute. This is the trade that is stress-free. This is the one that's kind of oh, okay, I know what to expect. This is the trade that everyone is looking for. This trade, regardless of if the market chose to, regardless of if the market chose to go up or down, meaning that it went up or if it went down, it don't matter. Everyone is trying to take the trade that they can kind of hold a little bit, because that's where you make the money. You know what I mean? If that's the case, all you gotta do is mark out the area that creates the area of fair value or creates the consolidation, that creates the sideways market, that creates the highs and the lows of market structure, and then that's it. You're chilling. You don't got to do anything else. Like, look, I can go down here. Where's my horizontal line tool? I'm gonna go down here and put a line down here to try to figure out, why are these lows here? Because I can't see it. If that concerns me, right? How back or how far I gotta look to the left to find it. So it's somewhere here inside this gap. Well, I see this. I can choose to just at least have something marked out. Or if that's not going to do it for you, then just go ahead and mark out the area where the low is. You know what I'm saying? Multiple ways to try to articulate this. For all of my crackheads out there that understand that there is an answer. Damn, I had to come down to a 5-second chart to find it, but there it is. Boom. The answer does exist, unfortunately. Unfortunately. What am I trying to do? Extend this to the right. Now there it is. Now I have it. It was the area, it was the order block that was made after the after the gap that was making, after the gap that was made, going in from one trading day into the next trading day, and then the market continued after that. There it is. So if you really, really, really cared about having the specific area marked out, you can go find it. Or you can just go ahead and leave the, where is it? Or you could just go ahead and leave the, I don't even know where this was. What did I just mark out? Oh, I'm over here with it. Okay, there we go. So there it is. If you really, really wanted it does exist. Perfectly. Tap 50%. Okay? It does exist. Or you can just go ahead and mark out the areas of demand that exist at the lows. Just mark out all the wicks and you'll be good. You can just do it like that. Either way, you know you got supply and demand marked out some type of way. You got the extremes of market structure, which are going to overlap whatever the demand level is from the past. That's why Wick sauce was so powerful back in its most raw, basic form. Or you can actually you can go find it. Either way, you're good. So like, for example, Quinn, you had asked the other day, and I didn't respond to you because I actually didn't know. But I was also dealing with something. I didn't have the bandwidth to take out time to respond also. But you had asked, like, is this, I think, specifically considered an area of demand? Hopefully this answers your question. It's like, it's market structure, or say in this case, would it be an area of supply? So it's technically market structure, but we know how important this piece or component of market structure is, and we know that it does overlap with the supply that is actually being based on. So the answer is like yes and no, if that makes sense. Okay. But either way, you got it. Right? So supply and demand is like, there's a reason why niggas love supply and demand. There's a reason why economists love supply and demand. There's a reason why it's the most, it is the core concept that you learn in high school, whether it's mandatory or whatever the case is, right? All of these are going to come back down and overlap with levels. Take this, extend it to the right. This is what I'm talking about. Marking out the areas that showcase why that was the low. Because hypothetically, now you understand what happens if we ever come back down here. You know what I mean? Like you have the areas responsible. And then when you get good enough with this, or you're feeling a little gutsy, then maybe you might be able to understand one day, you know what, I might be able to just take this sell. I think I saw some people demo trade this in the chat today. I think DeMar took us short on NQ on the 15-minute chart. I think this was it. I'm pretty sure, to be honest. So yeah. Mark out your market structure. Let me get back to all of this stuff that I was talking about here, because that was a big tangent. My bad. So anyway, by marking out market structure, by marking out supply and demand, you automatically get your highs and your lows covered. You get supply and demand itself covered. You get order flow covered inadvertently, not even realizing it. You get the reason why, because everyone wants to know, why did the market start consolidating? That's why. So you get that question answered. You get premium and discount considered already in the range that you're looking at. That's the high. This is the most premium of this range you got. This is the most discount of this range you got. So that's already marked out and considered for you. And so, like I said, once again, this is how you keep it simple. Everything up here is simple. These nuances, let me put in here advanced. Market direction, a high time frame bias, and like I was trying to showcase, you need a high time frame. This is commonly going to be called POI/AOI, whatever. Areas of interest, point of interest, right? Something like that. For whatever reason, it's called a ICT, I think calls it a PD array. Whatever, it's just a higher time frame zone. So in this example, what would that be? That would be going back and trying to look to see what is the demand that is causing this area to get created right here. And the answer is kind of weird, because it's like we have this gap and all this kind of stuff, but it's just, you could consider it everything, because this is a area of demand, but it already got respected. We know that this broke out. It's really hard to infer and interpret here. Not even gonna hold you. But it would just be something along the lines of marking out a higher time frame area. So if this is already balanced, and let's just say okay, we eventually went up to break all of this, it would be equivalent to you just marking out a area from the past based on a larger scale move to determine why these small scales or reactionary or these smaller scales of information are having the reaction that they're having. That's all. That's marking out a higher time frame area from the past. Okay, or like this. This would be example of a larger scale area of interest. Because of this area getting flipped, it causes huge, massive move. So if we're trying to look here in the moment for for small scale trades or triggers or entries, they're happening because price is going into a larger scale area. So that's just like a side note, something to consider, right? once again, advanced. And then the last thing is, because there was three, and I didn't even say what the main one was. It was market direction, so high time frame bias, high time frame like areas of interest, and then let me look at the chart. What was the third one? Oh, the market balance before breakout. So that's one of them. And then you can read the candlesticks. So like if you see people talking about candlestick reading, this is what that is in the moment. And I already mentioned it already. I already touched on it, but it's understanding that this wick represents rejection. And that even though it looks like we're going down, price is not closing underneath the low of the rejection. Understanding that this is buyers here getting in because of demand. And if they can hold on a lower time frame, this looks like a double bottom. It looks like a lower low if you don't read it properly, but it's really just a W. It's a price came down, went up, came down, went back up, made a neckline, and so on and so forth. You go down low enough, and it's going to look exactly like I just described. A W. That's basically what it is. And then the market continues up. And everything here is technically balanced. It doesn't look that way, doesn't feel that way, but it technically is. This is an area of balance. This is an area of balance, so those overlap. All of this is balance. So, and all of this overlaps. Then you got this area right here that's internally balanced. And that's stacked on this area from the past that's internally balanced. And you get this weird matrix of balance inside of balance on top of balance, stacking to the point to where it's able to justify that the market can trade higher. Even though it feels as though if I go on a different time frame, the market is not balanced. Like even up here, there's a gap right here, but the market's balanced. This is balance. And this whole red box right here is balance. And there's balance in here, order blocks and order blocks. So everything is technically balanced. And it's justified for the market to continue trading higher if that's what it's going to elect to do. Right? So that's just like for those of you who have really keen eyes, once again, even me, I'm trying to elect to keep it as simple as what I have here. The only reason that I would continue to hold on to a couple of these nuances is what happens if I find myself here. Like, me personally, I like to be able to still figure out how to capitalize on the market as it's wherever it is. I'm going to want to try to figure out how to assess what I need to do. So what if I miss the move? A lot of people is going to be like, well, Romel, like I missed the move. And, you know, so I saw that there were areas of supply right here. So I got into a sell, man. I got into a sell and it didn't work out. Why? Because all because it exists doesn't mean it's not going to get broken. But by being able to read these candles, I'm able to tell you like when and why that decision was made, right? And there's areas of balance everywhere that showcased when those areas were getting broken and flipped anyway. You have new areas of balance being created on top of other areas of balance. You have order blocks being made going higher. And then let's just say you had that whole area marked out. Why would we consolidate in premium of an area of supply if it wasn't to break it? If this is supply, and if this is why this high is made, and this high is made, and we're up here again, and it's technically supposed to be an area where highs are made, why would we start to trend sideways above 50% after a bunch of higher lows and rejection gets made? It's like it doesn't take, like, why are we making bullish order blocks? Why is price failing to close below candles or wicks? There's one. There's two. Like those are just easy, simple little wicks, I would think. Like, why is the market failing to like literally make any progress? Like, look, it failed to close below a bearish candle. Sellers couldn't close below one bearish candle. Bro, they're on your side, so buyers are strong here. Then you extend it out to the right. Oh, look, they closed. It's time to sell. No, because now we have more competition. They got to close below the rejection of the rejection. So sellers still make no progress. Why? So reading these candles here in a moment, I would like to have a couple more nuances in my bag that help me understand that, no, you know what, this area is getting flipped. I'm going to go ahead and take buys. The market's still continuing, or I'm not going to enter into sells. One of the two. To either stop me from entering into a short, or if I was in a short, to help me know when to get out before I start to lose more money, because, hey, I can monitor my position. Like, what do you do after you place the trade? How do you know when to get out? How do you know when to let it ride? How do you know where to trail your stop loss? How do you know all these extra things? All these extra questions is not as simple as what prices are important, how to find supply and demand. So there's more to it, right? There's a lot that can go into it, but there is a very, 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 very simple answer on how to get started. And this is like the most simplest version of price action and trading, with the one concept that I think is the most relevant, that you could boil everything down to just enter and let it be. It's way more passive. You have to wait for these areas to get broken if you choose to take that route. There is a lot of information that's automatically being taken into account that you no longer have to keep track of, right? Think about how many people trade these concepts: market structure, supply and demand niggas, order flow niggas, me. Hold on, balance, imbalance, or whatever the case is. But that's still in this. So that's three. Oh, premium and discount people. Like that's four. Well, hold on. 1, 2, 3. That's three different things being wrapped up into just supply and demand itself. Right? So when I'm teaching you how to mark out BIR and A&O and whatnot, the reason why it ended up being the answer or the conclusion of everything that I've learned is because it's the one thing that overlaps everything I've tried to study. That's my point. It overlaps everything. And the answer is because it is literally what determines price. So here, let's not take my word for it. Let's go Google it. Supply and demand. According to economics, price is primarily, not secondarily, not tertiarily, primarily determined by the interaction of supply and demand, which indicates the equilibrium, aka the balance, the fairness, the equality, the equitability, the fair transaction of goods and services in the marketplace, and in this case, the fair transaction or engagement between buyers and sellers of what? NASDAQ stock, NASDAQ, or gold, or silver, right? A fair transaction of this good, this asset, this thing, right? Showing you where people are willing to buy based on fluctuation, and yeah, when supply and demand is balanced, price is stable. So this is stable. Price is stable between 167 and 27275. That's roughly a $100 price range. Price is stable, was stable here for a period of time until it wasn't. When that instability stops being that, or whatever, when supply decreases or demand decreases or increases, whatever the case is, then that gets printed. And then guess what? We start being stable somewhere up here now. And that's just how that works. Okay? So we're literally trading like this is where like I get to the point where like, for y'all who knows, be like, yo, I just be like, press the button. Because your faith can be rooted in the actual concept. Because low key, it's not even conceptual. It's not even theoretical. It's low key the truth. It's what determines price. It doesn't matter if someone on TV has to say it, or if I can sit here and ask you, hey, do you remember when COVID happened and the demand for toilet paper went up? What did that look like in the market? At the grocery store, at the supermarket, like there was no more toilet paper, huh? Like it, you already understand supply and demand. When I say, hey, when there's a gas shortage, when supply decreases and demand is still the same, what happened to the gas prices? Oh, it goes up. Okay, let's just say you only have 100 units available. Let's just say like it's a limited edition product. Only 100 will ever be made. What happens to demand? Naturally, it goes up. You can manufacture and create your own supply and demand in life. Just limit the supply. What do you think I be doing? What do you think we did in the past? What do you think people do? What do you think that nigga Zeke be doing? Oh, 17 spots left. All right, guys. 5 spots left. He's manufacturing supply and demand. He's manufacturing his own supply. He could create 60 spots if he wanted to. It's like it's being created out of thin air. Is there a demand for it? Is there whatever? Okay, well, let's go ahead and create a market and see if it's out there. Okay, cool. You know what? Demand is pretty low. How do I manufacture demand? All right, let's make it limited. Now you just gotta have it, because why? People don't want to miss out. I'm not saying that like anyone is doing anything wrong. I'm just telling you exactly how this stuff works. It's always supply and demand. It's what determines price. Look around and look at how much you pay for stuff on a day-to-day. Look at how much you pay for goods and services all around you. It's supply and demand. It's what we do. It's what determines price. What happens if you have a lemonade stand and you sell lemonade for let's just say $2.50 a cup. But then someone across the street or down the block, they got a lemonade stand too. But they selling theirs for $1.50. Well, in order for you to stay competitive, you either need to do something to make your lemonade worth $2.50, or you got to lower your prices. Because it's all supply and demand. Because why? Why do you got to lower your prices? Because somebody else, the average person, they're just gonna go get the $1.50 lemonade. You feel me? So if there's not something special about yours, then why should it be bought? That's where competition comes from. That's why it's good to have competition in the marketplace, so people can have fair pricing opportunities as consumers in these marketplaces, right? When you don't have fair pricing, when you don't have competition, you have monopolies. Monopoly impact on prices of goods and services. Right? This is why we hate monopolies. Because what do? Monopolies generally harm consumers because they raise their prices higher than competitive levels, often reducing the quality and availability of goods and services. Why? Because they're the ones in control of that good or that service. Right? So because they're aware of that, they can create and manufacture and manipulate their own supply and demand. If someone is sick, and this is where, like, I'll string this all together, like I was saying earlier, economics, we're trying our best to put humanity, well, I'm not saying we're trying to, but the school of thought that I learned, there's a bunch of people that are really trying to put humanity back into economics. It doesn't exist today. Because if we did inject humanity back into economics, all because there might be a monopoly, it wouldn't have this impact. It would be people first, not profit first. But corporations are naturally profit maximizing. Like I'm gonna be giving all of these lectures, profit maximization, what do you spell that shit? Maximization. Profit maximization is the process of identifying price and output levels that generate the greatest difference between total. All right. Super technical term. Basically, this is to state that it's a general assumption in economics that corporations are profit maximizing. If that means they need to cut people off, they'll do it. If they need to lay people off to cut costs, they'll do it. If they need to cut corners on the cost of whatever their the cost of their materials to build their product, they'll do it. If it maximizes profit, they will do it. Profit maximization, yeah, the AI movement, replacing humans with machines. Yes, profit exactly. That is a macro example. Good job, Ari. That's a macroeconomic example of profit maximization. But like I stated in one of my other lectures, we only get to macro levels because people are profit maximizing in some way, shape, or form on a personal or individual level first. It always starts with you before it ever is identifiable at the business or corporate level or whatever the case is. So it's like, boom, we could take this and create a whole lesson out of it. And I can sit here and teach you in all the different ways and start teaching about greed and psychology and all this kind of stuff and show you all the ways that you as a human being, in some way, shape, or form, you fall under the idea or the guise of profit maximization or maximization of something. And it's always going to serve like a good and a bad at the same time. A good for you and a bad for others. Right? Maximizing anything is not really that's not the goal. That's not really what we should be doing. Like in any realm of life, in my opinion, I think that when you start trying to max it, all of this shit, bro, I don't even know where this shit came from. Look maxing, retard maxing. What other shit is there, bro? Like, all, like, y'all know what I'm talking about. That whole Gen Z shit, like all the different forms of maxing there is. Like, I don't know. Like, that shit is stupid to me. Never heard of retard maxing? Because basically people are just like, so what retard maxing is supposed to be is just going through life without thinking. It makes life really, quote unquote, blissful and beautiful. Or whatever the case is. But it's like all these different forms of maxing Gen Z. Like all this maxing stuff, look maxing, aura maxing, nana maxing, lifestyle optimizations, protein maxing, sleep maxing, like low-key. These little retarded niggas is a little smart, you know, because this is how corporations think. They profit maxing, okay? Yeah, like this is really a thing. Like people are just maxing on everything, like I don't know, right? But like yo, there's greed, there's consumption, or some of these are kind of cool. But it's like, but the point is that there's a sin, there's a greed, there's a level of unalignment that's associated with every single one of these. Every single one of these. It's like anything, like there's count, like anything can be quote unquote maxing. It's, you know what I mean? But businesses do it. So that's why I'm saying these little niggas is kind of onto something, because they're not even realizing they're thinking like corporations. They're profit maximizing. Profit maxing. Right? So point is like I could sit here and start telling you like, oh man, like what are you maxing? What are you maxing? Trauma maxing? Like, well, you know, whatever. I can sit here and create some stupid shit, package it up, make a whole psychology course, boom, now there's money in my pocket. Because now I understand supply and demand. I can just create and manufacture my own demand. Boom, there it is. And then am I wrong? No. You should be doing the same shit. You should be doing the same stuff for your life. Don't you want to get paid to exist? Don't you want to just like, you know, get out of this rat race too? Yes, trading is an avenue by which you can come into windfalls of income to get out of the rat race, but really it's to get money to put this into the next venture. Or put this into the thing that you want to do. You aren't doing it, are you? That's why you're here listening to me. So it's like, I'm understanding that nuance. Why do people make the decisions they want to make? Because look at how many people are placing buy and sell trades trying to escape the rat race so they can do something they want to do. So what's the money for? Is it really for a new car? Is it really for a Lambo? Is it really, you know, like what is it for? What are you know what I mean? I would say that what it ought to be for is for you to put this to a venture or to free up your time so you can do what you want to do, because trading is a means to an end. You think we're going to trade forever? You think your mind's gonna be super duper sharp forever? Is this the only thing you're going to do to make money forever? Or do a nigga just need, I don't know, you know, like a quick little 20,000, 30,000, nigga, and you gonna start buying and reselling cars or some shit? Or do you just need that down payment money to start that real estate portfolio in your rental properties and generate some more consistent passive income? You can always take a trade on the side. Nigga, you can always come here, you know, once a week, twice a week and take a trade. Or you can always come here, you know, like trade for a good, you know, if the market's looking good this quarter, bet I'm gonna trade this quarter, leave the rest of the year alone. You can always come here and do what you need to do. You know, make you a little windfall, make you a little bread, but it's like, bro, like you want this to be a 9 to 5, you want this to be an everyday thing? Hell nah, you shouldn't. You shouldn't at all. Now, can you make hella money through this? Yeah. But you tell me what type of money you want to make. You want to make money that's a little bit safer and guaranteed, waiting for a range to break out? Or do you want to keep testing your luck, making a little money inside of a range? It depends. Everyone has a different goal. But this is how you capitalize on the big move. That like all you do, like you want to trade market structure, bet, go find it, then look left, mark out what created it, and that's what you trade. The highs and lows don't matter. The highs, like they don't matter. What always had mattered was the areas that get created. Like that, like, you know what I mean, that these areas are based on, regardless of scale, regardless of time frame. You want to be sensitive to know like how a range ends, or is like, say like you trade PMD or something like that. Okay, cool. Bet this shit is busting all day, every day, until that range gets violated. Your trade literally could just be like the violation of the range itself. That's how the continuation happens over and over and over again. That's how the what do you call it? That's how the shit forms, right? And then the crazy thing is like you gotta understand like the matrix of this shit. You got ranges, in ranges, ranges on top of ranges. So yeah, that's a valid range. You can trade those today. But then it's like, okay, well, you got this one. Like you got a bigger one. And low key, it kind of like goes forever. You got one right there. You got this one that you could look at in theory. But then you also, wait, hold on. First of all, it didn't even draw it right, and then on top of that, it's the wrong color. You got that range you could look at in theory, right? I would say this one, but nope, that one already got broken, so it's not valid no more. So then you got this range that you can look at in theory. Then what else do you got? Then all of that is inside of this range that you could look at. But then if you know a thing or two, because everything is still inside of that range, right? And you can keep going back and further and just marking out all these different areas, all these different ranges, because there's going to be a high, unless we're at all-time highs and shit. You know, nothing you can do about that. But under that, there's always going to be a supply or a demand area that has caused the market to top out or bottom out. Go find it. You don't, and like I'm saying, when do you go looking for this? So just so everyone is aware, you go looking for this after the fact. You go looking for it when the market does this. oh, that's a pretty nice high. Let me go find it. That's when you go find it. So this is the alternative, simple ICC, communicate complexity to children perspective of supply and demand, because it's not a concept, it's not a theory, it literally is the thing that determines price. And if we're in a market trying to figure out what is the price of these assets, these goods, supply and demand is always the answer. And the way that you go find that shit is you simply need to look at where the prices that are important to you, you need to look left and go find it. So keep in mind that supply and demand determines price. What prices are important? This is heavily subjective. A lot of different people think that a lot of different areas in the market are important. So for our answer today, it's market structure. The way you go find it is the same way you find anything. You look left. Mark out the highs and lows, look left to find the area that was responsible for creating it. That's it. It's the most simple thing that I can offer. And when you do that, like I said, all you got to do is sit here and wait. You go find the areas. Oh, why are these highs in the market? You don't just mark out the highs. That's not how we're doing this anymore, right? You go mark out the area that created the high. That's how we do this. That's it. Because like I'm saying, there's a lot of people who benefit. Like I'm saying, look, it's subjective. You got people who benefit off the market going sideways. What areas are important when the market is going sideways? Alpha and omega. So this is an alpha and omega. If the market is not going to break out and continue down, then it needs to respect the set of market structure or the demand at the low of the whole range. If it's not going to go higher, then it needs to respect the supply that started the high of the range to begin with, right? And this being the first green candle, the first lower high before we broke a low inside this leg of the move. Same thing. Unless you mark it out like this. And even then, you still get a tap. Didn't happen all the way until over here though. So it's the same, like, look at that. Because there are going to be people who are going to mark this stuff out like this. You have a low, and then price made that high, and then came down and made this lower high, and so on and so forth. Either way, you're still good. Let's delete this. You're still good. You got the area responsible for the market structure. Then you got a bearish order block up here. If this is the perspective that you had, it's more visible on the 15-second chart probably. There it is. Okay, all this area of balance. And then once again, y'all, what have I taught y'all for those who are in priority? What have I taught y'all about this? What happens when you have a bearish area of balance, a bearish order block, overlapping a bullish order block in the same price range? What does that mean? A breakout, exclamation point. A breakout is imminent. You can take it with your eyes closed, yo. And then on top of that is like, okay, you have the area down here marked out that's showcasing where we kept rejecting from. And then this area of balance has the audacity to react like support and resistance hella clean right on top of it. And then it has the audacity, the caucasity, like the longitude and latitude, bro, like to make a higher low and then break out to the upside. Like you get market structure too? Wow, you're too kind. Like what are we talking about? And you can't take that trade because you can't read market structure, or just this is very, 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 very basic. I'm not trying to crash out. There's no reason for me to crash out on anything or anybody. Because low-key, what I'm trying to do today is undo all of the information overload that people are experiencing, which I covered in this video. So this is me telling you what is the most relevant piece of information, technically speaking, that you can analyze to know where price is going to go. And it is and has always been supply and demand. On the next lesson, what I'm going to talk about specifically, delete all this. What I'm going to talk about specifically is just sentiment. But in order to talk about sentiment, I needed to talk about what did I need to talk about? I needed to talk about supply and demand first, because just to give you a precursor, this is what sentiment is. Sentiment is understanding that this whole area is bearish, like this whole range right here is bearish. We were bullish. So watch what I'm about to do. We were bullish here. Were we not? That's a low. That's a green candle. Price made a swing high. So yes, we were. Until we were not. So this part is not necessarily necessary, but I'm just showing you, like, I'm showing you sentiment. So now, this whole entire range is bearish. Technically speaking, I gotta do it like this. Like, if I'm being really technical about this, okay? Being very technical about this would technically be a green box right here. We were bullish for that literal period of time. But then this high was always bearish when it was created. That low was always bullish from the time it was created. When we closed below the low, so actually realistically this extends out like this. We were bullish until we closed below the low. Boom. That high as a price point is and was always bearish. We closed below the low. Now the whole zone is bearish, completely and totally. The zone is bearish, the high is bearish, and when we go back up into this area, we are not going into this area with the perspective to buy from it. We're going up into this area from the perspective to sell from it. So we do. We correct back inside, we close right below. Look at how perfect it is. Closure. Ordered block, sell off. Okay? Then price comes down, goes back up. Look at how perfect the retest is. Oh, well, what do you know? If this is a high, Romel said that I could just look left and try to figure out why that is there. So, okay, well then, darn, I'll be damned. Internal supply level. And so you start to see and learn a whole bunch of stuff. Like, it's all there, right? But anyway, let's keep it overall. So now price comes back down. Where is it buying from? Demand. What type of demand is this? The first higher low that broke the high. Track the trend. Price went here, made a high, first higher low, broke the high. After that, market overall just trended higher. Nothing else really matters. It's the first area. So where are we buying? We're buying there. We're buying there. We're buying there. Okay? The sentiment of this area was always bullish. After this got created, boom, that's green. We were bearish very briefly until we were not. After we broke and closed above it, the whole entire zone is bullish until we close below the lows. Okay? Buyers don't die unless lows get broken. Sellers don't die unless highs get broken. So this whole range is bearish until we break the high. This whole range is bullish until we break the low. Sentiment, what I'm showing you right now, has always been the premise of ICC. It's always been the premise of order flow. It's always been the premise of who's in control. Is the market bullish or is it bearish? It's always been the premise of everything. This is the lesson underneath the lesson that you learned from your mentors or your teachers that you haven't been taught. Okay? And it's simple. It's the first thing I ever learned, low key. Sentiment. It's a very ancient word. It's one of the three legs of action. It's one of the three legs of analysis. I'm trying to figure out like what to type in so it just comes up like is this it? Three pillars of technical analysis. No, okay, that's whatever. Bro, it's technical, fundamental, and sentiment. Boom. You need three legs, bro, for anything to stand, to balance on. You know what I mean? Technical analysis is where everybody is. Fundamental analysis is what everyone is getting fucked up by. What is this? This is real life shit. Okay? The market don't just exist because people like you and me need a couple bucks. No, this is real life stuff. You got gold being held and moved across the world. You got currencies collapsing, and you got Trump saying stuff. You got people dying, bro. You got oil tankers being shot at. You got people in Australia with the most outrageous food prices and gas prices you've ever seen. Like, it's real world stuff that happens. This is fundamental analysis. And it honestly takes a whole nother mind level of research and competence to first of all study this and then understand how that impacts market direction. And then over here, you finally have this long lost word that, like, bro, this is on babypips.com, my nigga. Like, how many people know about baby pips? Like, baby pips has been around for a long time. If you don't know what baby pips is and you just got started on trading and whatnot, and your first introduction to trading has been TJR, if this is who you got inspired by, if your first introduction is Psy, right? Like, people, if your first introduction is Q Banks, if your first introduction is, who else is there? Lambo, Raul. I'm not calling these people out. No one's doing anything wrong. But if those are the people, what's her name? Lakira Trades. Okay, well, she's not that popping, whatever. But if your first introduction to trading are people like that, bro, and you don't know what this website is, go scroll through this website. Go to the learn section, or the trading. Hold on, the learn section. Go to the glossary. Look up some vocabulary words. They have a course somewhere. Where is it? Trading systems. They have a trading psychology section, technical analysis. No. Learn trading quizzes. These are just basics, bro. Like basics, support and resistance, candlestick patterns, Basic stuff. Basic stuff. Fibonacci. What is that? What does Hakanashi mean? Oh my gosh. Elliott, like Japanese. The fact that I have to sit here and convince people that the high of the candle is a wick irritates my soul. Right? Important chart patterns, like just simple stuff, old school stuff, basic stuff. Yes, it's retail trade level. But I mean, once you get through it, then you start to get into some real good stuff, bruh. You start to get into pivot points. Everything I'm teaching you how to mark out right now is eventually a pivot point, my nigga. That's what it is. Resistance, support. Oh, bet. Like these areas are gonna become like pivot points. That's what this stuff is. Look, resistance, support. Resistance, support. This up here was a high. So it was resistance. Now it's a support. Duh. You know, I'm not saying duh. Like right now, I'm not even crashing out on y'all. I'm just crashing out on all the people that are gonna watch the video. You feel me? But once you make it through some of the boring stuff, then pivot points will make sense. Then sentiment. Are we bullish or are we bearish? Right? Divergence. Hella important. Like basics. This is a pre-crash out. Basics. So anyway, what I'm trying to say is sentiment, bro. It's kind of like a dinosaur word. But it's literally the glue that holds, honestly, most of the technicals together. People, back when I was learning how to trade, what people would say about this is you only need two. You need technical and fundamentals, or you need fundamentals and sentiment, or you need like sentiment and technical. And mostly everybody is going to sit here and dive deep into technical. Which other one are you going to take? I honestly dove deep into sentiment. That was my approach, because I'm like, I don't know, that's just where I started, bro, and it was easy. Is the market going up or down? That's what sentiment is. That's all it is. And what is the probability of the market going up or down? That's all it is. It's void of technicals, low key. It's just a pure assessment of, is it high probability of price going up or probability of price going down in these areas or at this time? That's it, because that's the only thing you can analyze. Price levels or time. In this area or at this time. That's all you can do. So if you want to understand sentiment from the perspective of price, you need to analyze supply and demand. And you need to first understand how to locate it. Then the second thing is, I've been taking forever to get to it. Goddamn. All you do is you come here and you realize that when we finally break above the high, then the whole entire area shifts bullish. It's that simple. The whole area shifts bullish. Boom. So then, it is safe to assume that the market is going to go up, as long as we don't come back and close below this zone that we just shifted. Point blank period. That's how that works. Sentiment answers the question of when and where did we shift from being bearish to bullish or bullish to bearish. That's it. And then now, what does that tell you about this whole area? Hold on, watch this, because I'm not done. I'm still crashing out. Or I'm having my pre-crash out. What does that tell you about this whole area then? That this whole area technically was neutral territory, But how do I explain this? No, it's not in bullish control. Yes, the whole thing is in bullish control, but only because of what we did afterwards. What I'm trying to say is, okay, bet. I'll just look at it exactly like this. This whole area is neutral. This whole area is balanced. You know, for me, my color for balance, my color code is blue, but that's just gonna make it look weird, so we'll just keep it gray. The whole area is neutral. The whole area is balanced. We know that on the top side is sell heavy, on the bottom side is buy heavy. But what do you think now happens? Here, let's put the fib back up here too. From the supply responsible, not from the high, not from the low. And I don't know what Zeke teaches, so if you follow Zeke, then do it how he has taught you, but I don't, you know, I'm just trying to help. I don't even use this, but it is useful. Damn. Oh shit, that shit is hella useful. Look at that. There's the demand, there's the supply. Oh wow. And look at how clean the levels are. They just line up. The high of this area, which should be bullish, is right at the high of the demand area. I'm not gonna lie, bro. Zeke wants something with this shit, but I ain't gonna hold you. I'd be like, not using it just because the only reason why I don't use it is because I don't have the model. I guess now I do, but this is if I do use it, this is how I use it. I use it to determine when this area is done, and I take the breakout. I don't use it for sells here and buys here because I like this trade, but that's me. I like this trade. So all because I like this trade doesn't mean that this is not. Like, you know what I mean? Like, bro, like, yeah, he break out above this, buy. I think this should be, yes, this is fire. Fire. All these levels are perfect. I like taking this trade. So I don't know if he has a model that shows you how to take this, but, you know, or whatever. But, like, yeah. So anyway, what I'm saying is like, what was I saying? This is the range. Okay, bet. Okay, bet. What I'm trying to say is after sentiment in this area shifts totally bullish, then what else can you possibly suspect is going to happen? This whole area now is bullish as far as we're concerned. That's what I'm getting at. This range gets dealt with. This range is done. Like we're donezo. Like we're buying now. Like we're done. Because this whole thing is bullish, bro. Like if there were sellers up here, they just shifted sentiment to being bullish. They're done. So now the range is done. So now you know we're gonna go up and either make a new one, or you need to start playing off of a bigger range somewhere, or you just understand that the target is gonna be what? Supply and demand areas. You mark them out, you wait for price to get up there, you read your candlesticks or whatever the case is, I don't know. But you know that the market's gonna buy up. Something that I learned a long time ago is typically when a range gets broken, you can suspect that the market will move a representative amount to the upside. So if this was the size of the range, this is extra shit that I just know in my mind. If this was the size of the range that got broken, then you can suspect that the market is going to move at least that amount before sellers start to what do you call that? Enter in a significant manner. That's some extra side shit. Whatever, you can go and back test that or whatever if you want. But my point is when the whole area shifts bullish. When the highs shift bullish because in the bottom is already bullish, making the whole range bullish, then the market goes away. So analyzing sentiment is like super key. Same thing would happen in the case of the market shifting bearish, hypothetically speaking. Say if the market played out like this for whatever reason, right? Then now this up here would maintain bearish. This right here would have flipped bearish. And now the whole range itself is totally bearish. If that makes sense. And that's how we trade away from ranges, right? And why am I talking towards this? Why am I talking in this manner? Because this is what most people try to trade. This is what most people go for. This is what side trades. I tell, like, this has been common, like understood for such a long time, that what I'm saying is where dude makes his money, where people make their money, is when the market is going up significantly or down significantly. Not that many people know how to successfully do this. Think about how many people lose money here. So now, yeah, if you do have a system that makes you money when the market's going sideways, but most people are losing money, like, holy shit, do you even know who you are? Like, do you know how powerful you are? Because everyone is thirsting for this move. Everyone is thirsting for this drop. Like, that's what people want. This is how you find it. You wait. So you have two things you can do. You can either trade this range, or you can wait for the range to be over and analyze, wait for supply and demand, wait for sentiment to shift, and now capitalize on the actual move. Like, you want to make money, you want to be able to just, okay, bet I got tapped in at the top of my range after it got null and void and all that kind of stuff. Boom, you can get tapped in, trade away. Like, you know how stress-free of a trade this is? You know what I mean? Because it's like, okay, like, you got people who might understand how to get into this trade, but they don't know how to hold the trade, right? They're going to get into this trade, price is going to come up here, they're going to get out the trade because it's an area where price should sell, and they're not going to let it run, you know? Because normally that is what's going to be happening. For as long as you're in this range, you're going to sell here, buy here, sell here, buy here, sell here, buy here. But what about when it's over? When it's over, it's this simple. Wait for the area, the supply area that's responsible for the highs in market structure to get shifted. Wait for the demand to shift, and just take that confidently. And you're not just taking that based off this information alone. Like I said, you have higher time frame areas to tell you why price is buying down here that I already deleted from the past. And then where you got all of this, like you got a supply area up here, so you know price is gonna gravitate up to this blue zone. Then if it breaks it, okay, cool. It's like you got other targets. It's always gonna be a supply or demand area. So if you're in this buy, you can just target these one at a time and take partials the higher we get. And then it's like, okay, cool. Wait for this piece of market structure to get printed. Don't try to predict it, just wait for it. And then once you see it, and you be like, oh, okay, we have this high. Let me go ahead and look to the left. Okay, well, let me mark out what's responsible for making that area. Cool. Now you have your area marked out. And it's that simple. Now you just, price gonna go up. And what do you know? It gets split, and a higher low made, and then price buys. Like, it's that simple. So like, this whole lesson is for people who want to take this trade. People who want to know how to like take that, or whatever the case is. I'm trying to draw this up a little bit, something reasonable, like. You know, people who want to learn how to take that, and people who want to learn how to take that. Right? And I taught this from an ICC friendly perspective. Oh, what you said? Are you basing your stop loss on your entry time frame? My stop loss is gonna be based. Yeah, it's gonna be based on in the moment, to be honest. Because if I'm taking the trade in the moment off of an area that just got invalidated, I'm gonna be kind of, that's a tight stop loss type of position. There's like, for example, I'm not putting my stop loss down here. There's no point. At most maybe underneath the area we just flipped, in case we come back to retest it as a support, which happens often actually. In this case, it didn't do that, right? But that's why some of the nuances are important. And the only other nuances that's important to this is literally reading candlesticks. Being sensitive to know when you have a rejection candle, when you have an engulfing candle, when you have like buyers actually in control or what, right? Like just being sensitive to some of the nuances. Here, price, it broke. It wasn't a perfect little retest, right? But what other things come into play here? So without going down to a lower time frame, we have a high of market structure that just got broken. So that's one. Like that's one tail that we have. Cool. Now, if we just made a low, and I'm telling you and I'm preaching to you that market structure gets made because of supply and demand, technically speaking, it does exist somewhere here, and you can literally go find it. It's hard to see, but it's right here. It's right here. And actually, before I get sidetracked, let me just continue. You have price coming back to retest market structure. That's one. Decent bullish candle. Not fully closed, like well above the open of this candle. That's looking pretty good. Price actually trades higher. We trade into premium. All these sellers here. Now they come back. What can sellers do? The best that sellers were able to offer was a higher low. Is that strong for sellers? The answer is no. What was the best that sellers was able to offer? A rejection? Well, who's on this candle? It's not even sellers, it's buyers. Is that strong for sellers? No. So just reading the candles in the moment helps you determine who's in control in this area as it's being flipped, and helps you gauge timing on when you should press the buy or sell button. And then now that I got that out the way, everything that I'm talking about can technically be seen. Here's the demand area. Right? We have more nuances. What do we know about big wicks? Pause. Buyers are in control. What do we know about this first order block right here? Buyers are in control. So price is coming down or whatever, however you would draw this alpha and omega or whatever. Price is coming down and just picking up where it left off. Who's in control? Buyers. Right? Now we have a higher low. What does that sound like? Sounds like market structure increasing. So then what does that mean if we start to break this? Well, then that's the confirmation of an uptrend, especially if we end up breaking external market structure too in the process, right? So it's just like you have multiple reasons to tell you to like go ahead and pour into a position before it's too late. And then the market trades away. So this is like one major key to success. You sit here and you read the candles. And what are we reading here? We're reading the sentiment of them. That's what we're doing. Who's in control of this candle? Buyers. Who's in control of this candle? Buyers. Where do they have the most control? Here. In the wick, in the rejection. We can do the same thing on the sell side. Watch. Pretty decent wick. Who's in control there? Sellers? Oh, well, not anymore. Right? Like, we could literally do the same thing. Just read the candles. Or, let's make it even more simple. Let's delete all of this. This is still just a piece of market structure. The first area of bearish rejection above supply that feels important is right here. Okay, we just broke and closed above that. Bet. The next time we come back up and break above that. Wow, what do you know? Bullish. This is the stuff that I've been teaching in priority recently. People who've been learning from me understand that this is what who exists right here. Who makes big wicks? That was the most zestiest form. That was the most zestiest way I've ever seen anyone spell institution, bro. I ain't gonna lie. Anyway, right, institutions. Do retail traders have the ability to make large wicks? No. Especially in 15 seconds? No. So who has the ability to move money around that fast to make a big ass wick like that? Institutions. So now price just went above the area where institutions rejected. I've been teaching this as Morse code. When have you ever seen an institution get liquidity swept? Not never. So now, where do they trade to? Well, they simply trade back to where there's more institutions to tap in their buddies. Do retail traders have the ability to make this wick in less than 15 seconds? No. So now they're in. Bet. So now price goes back up to here. Well, we're not ready yet. The market makers need to complete the market cycle in this area. Is it a coincidence that institutions come down to get filled in the same area where institutions got filled? No. So institutions look out for each other, don't they? What do you think happens when you start putting weight on swing points in the market? I've taught on this so many times, but now here's some extra sauce. That's a swing point. That's a swing point. That's a swing point. That's a swing point. One day you're going to be marking out or putting weight on one of the areas that's kind of important. That's the point. So when you get a candle breaking and closing above where institutions are at, you already kind of understand what direction the market going to go. You wait until the market balanced. You can view this as either institutions getting themselves tapped in, or you can just view this from a retail trader perspective and understand that, okay, this area is bullish. Bet I'm gonna buy there. Okay, bet this area is bullish. We came back, fulfilled order flow, that's rejection, and we're holding support now. Okay, cool. Now we have a higher low. Okay, cool. Well, if we go up and we start to break highs, then that means that we should buy. So then, whatever perspective you want to have, you can get in here, press the buy button, stop loss below the low, and let it ride like that. Or you can try to wait for some extra timing if you wanted to do so, right? Or if you're like, I don't know, like I don't recommend this, but if you're really that scared, you can wait until you know we're closing above the range that this is, that exists here. And you get a candle that closes above here, and then now you can just enter into your trade up here. Point is like, the longer you wait, because keep in mind where we are, already in premium, of a range that's, or we're already flipping an area. We're already in, this whole area is like becoming, like it is dying, okay? So how high do you really want to buy is what I'm trying to get at. Your safest entry is inside this zone, or before we break out of it, or right when we start to confirm we're going up. But your safest entry is inside this zone somewhere. Because guess what? If the market fails and it comes back below this area and starts really making some progress to the downside, you want to have a smaller stop loss. So I'm already highlighting to you the area responsible. This is a supply area. We flipped it. The market's going higher. The longer you wait to enter, honestly, not only the more money you're leaving on the table, but the more you're putting yourself in a risky position, and the more you need to understand how big your stop loss has to be to account for anything can happen, right? Unless you're really just trying to scout. So when you're reading these candles, all you have to do is look at your market structure, and low key, this is like the best place and time to get into a confirmed trade right here. I would have been pressing the buy button and low-key spamming it somewhere down in here. Like after this rejection or something like this, like I would have been spamming it on this candle. Like so same area, but I wouldn't have needed to wait for this confirmation. I would have been in before we got too far away from this great area. So anyway, point is that's the last key to the puzzle. Read the candlesticks, and you can read it from a sentiment perspective, or if you have institutional eyes, you can understand that the institutions are going to be tapping themselves in and market making in these areas, because it's what determines price, and that's not a theory. So I have successfully given you a very, very, very full 3-hour lecture, and low key, you only need to rewatch the first hour and 15 minutes of it. You only need to watch the first hour and 15 minutes of this to get the whole point of everything that I said. Everything else is really like sugar on top, and like an analysis of various different perspectives and some of the nuances that could be at play. But everything got delivered low-key in the first hour and 20 minutes. Before, I think it was Tammy or Tam that someone said this is starting to get very unchildlike. Okay, so I don't know. Doesn't hurt to learn the lesson underneath the lesson. Your mentor, regardless of who he or she is going to tell you one thing. Doesn't hurt to understand why what they're saying makes sense. I didn't teach you a strategy. I didn't teach you, I taught you an approach. And this is just one of them, but low-key, it's a super duper safe, balanced ICC frame with a little bit of supply and demand, helps you get in at the right time, because when supply breaks or when demand breaks, that's the right time. Not about the market structure highs and lows. Those can get broken and faked out all the time. Someone's going to sit here and be like, okay, well, I've seen supply and demand get faked out countless times too, so you can't really say that's the case. Then in my opinion, spruce up on what supply and demand levels you're analyzing. Because this is heavily subjective based on what prices you think are important. So this is the answer for after market structure gets made, after swing highs and swing lows get made, go and mark out that supply and that demand level and then wait. because then at that point there is no guessing. You took all the guesswork out of the equation. If you're tired of trying to predict which supply or demand level is going to be the area where the price gets tapped at and all this going on, and you're tired of like being like you're tired of knowing that you can hit a 1 to 50 or a 1 to 20 trade RR or whatever the case is, but you don't know when, where, and why those are going to happen, then you can just go ahead and wait. Take that out of the equation, synthesize the information. If you want to trade with confirmation, if you want the move that really makes the money in a bit of a stress-free manner, and you particularly want the impulse or the indication or the continuation entry, you want the trade that takes you away from a range. This is how you do it. It's just a perspective shift. This is how you find that trade. This will not work if you continue to lust after top ticking and bottom ticking or getting tapped into trades. This is not going to work for you. There's a completely different approach and a completely different frame that has more nuances if you choose to do that technically without the use of tools to your advantage. It's a completely different, like you got to analyze different stuff. You got to analyze liquidity, and you got to analyze sentiment, and you got to really hone in on your technicals. And it's not going to be child friendly. It's not going to be, elementary. So, but it's simple enough for people to learn it. People have been coming in and learning it, but it's like, okay, bet. If the goal is to make the money, and if the goal is to be consistent, and if the goal is to not to worry about what happens at these areas, trying to predict a high or predict a low, then just go ahead and do it like this. It's the best thing that I could offer. It's the most simple and best thing that I can offer. This is my assessment of all of the things that are important. What is the truth about the market? And when I say the market, I don't mean the chart, I mean the market. Market dynamics. Supply and demand determines price. This is not a theory. And you want some type of confirmation in your trading, just take this approach, call it a day, wait for the demand or supply areas that created market structure to get flipped, get in, get out, that's it. Okay? Does anyone have any questions? All of this was inspired because what was that boy, Rio? So shout out to Rio for, well, not really, but I mean, it was so fitting that he talked about the very thing that I was thinking about literally just in the prior hour before his live stream. So will this be on YouTube? Probably. I'm probably just gonna like upload this. Well, why not? I mean, it's that simple. It's not like what is there to gatekeep on? Well, I don't know. I did touch on a lot of different things, so I don't know if I should. But I mean, like, what is there to really gatekeep? It's bro. Am I tripping? Oh, bro. I take the longest way to do stuff. Okay. What am I doing? Am I trading? Supply and demand trading. Supply, bro, hold on, trading. This video has 386,000 views and was uploaded a year ago. It's 2 hours long. This thumbnail looks pretty darn good to me. If she's talking about supply and demand, I definitely watch this video. She goated. This is if I did watch an ICT video, it was from this guy right here. In the past, like say if there was something I really needed help on, dude almost has 1 million subs. His content is very nice and digestible. It's not too long, and he's gonna teach you some shit. Like low key, like this is solid information. Like, you know what I mean? Solid information. So it's like what? Like who am I to gatekeep a video with my little like the video only gonna get like 1,000 views anyway? So yeah, I mean like why not? Hey, look at this. Look at this. This dude again. Like, look at this video. He's teaching about, he has a supply and demand curve right there. Right there on the top left. And then he got the high that was broken. Wait, no, I want the thumbnail to come back. Okay. Then he has the wick marked out with the box with the red arrow right there. He doesn't have a scaled down version of this right here. Let me take a screenshot of it. So like this is the difference between this video and like what I'm talking about. What I'm down. Hold on. Let me do it again. What I'm suggesting you look at. I'm suggesting, and what I'm preaching and teaching today is you go and you mark out this area right here on a lower time frame. If this high exists, you go mark this area out. Damn, that's too big. You go mark this area out somewhere to showcase why that high exists. And then boom, when it gets flipped, okay, there we go. When it gets flipped, look at the reaction you get. This is what I'm kind of talking about. It gets flipped, it corrects, comes down, taps to these highs, but then look at this. Look at the test. On a lower time frame, you see all of this stuff. You can get in on the confirmation of this going up higher. This is an indication. Cool. Do you take that? No. Then you wait for the correction or whatever the case is. You figure this shit out, and then here's your continuation up here. You're entering on this candle, or if you're lucky enough to get a retest like he did right here, you're entering there and you're taking it up to what? Supply, or if you have the balls to hold it because you know you should, or whatever the case is, then you do so. A lot of us trade futures, some of us trade Forex, but most people here, or at least the people who I've been talking to, like we day trade, so we don't, you know what I mean? We're trying to get in, catch our move, get out. You know, but if you wanted to start catching, what do you call this? Continuation trades, and then yeah, understanding where this all overlaps as far as market structure goes. It's all right here. Here's this high. Mark that high out. Damn. Boom. I'm trying to make sure that's horizontal. Cool. So then cool, we come back. Here's your correction, right? And so now this area shows internal structure, right? And then like these are the only two things you need. You have demand down here. Why? Because you have lows here. And then you have supply right here. Why? Because you have a high here. That's it. If price goes up, you know what's going on. You know what direction it needs to go. You have your higher time frame market structure and all that kind of stuff. And then if it goes lower, okay, well then you understand that the market needs to come down. Why? Because there might be some buyers chilling right down here, ready to. That was so gay. My bad. Intrusive thoughts. You have buyers down here chilling, ready to enter when price gets back down here, okay? That's the point that I'm trying to make. So then it's like, okay, bet, you know it's not time to go up yet because price has to come down a little bit further to tap these buyers in. Pause. All right, I think that's enough lecturing. I'm tired. I'm a little delirious. Y'all got it. Let me go ahead and skedaddle before I say something unforgivable. I hope this was helpful. Like I said, don't put this on YouTube with all that. Thanks though. All right, yeah, no. I'm gonna start my next content arc. I'm doing 2025 all over again. I'm gonna keep it not simple. I'm just going to give you the boiled down version of the most relevant technicals. And like I said, my area of expertise is sentiment. And today we talked about supply and demand. So it's like, that's not the only thing there is. I only showed you a perspective, but I tried to bridge it all together. So now you have a video where everything that's important to understand this perspective is in this video. If I make another video, it doesn't mean this is bad. It doesn't mean this isn't useful. It doesn't mean you stop trading this way if this works for you. Because if you want to start talking about getting tapped into trades, it's a totally different perspective. I'm teaching you breakouts, or I'm teaching you how to take areas that get flipped. That's the only thing I really covered in this trade, in this video. So there's a different set or a different collection of perspectives. Say if I'm going to start talking about something else that's important, such as liquidity or volume. You know what I mean? And that's going to be its own POVs. I'm going to tell you, I'm going to break it down and then build it up and show you how those things can come in handy, or where they're going to be coming into play later on. Right? And that's if and only if trading in those ways identify with you. Okay? So, and once again, I'll have to task myself with trying to communicate it. I'm trying to task myself with communicating complexity to children, like my economics professor taught me and advised me on how to do. So it'll probably start off simple. So you might only need the first half of the video. Just keep that in mind. So yeah, like I said, this is like almost 3.5 hours. I'm done. I'm gonna stop recording it. I hope you guys enjoyed that. And yeah. Do you guys have questions? Oh, let me see. She said yes. Wait. What high time frame base? Time frame don't matter. Whatever time frame you need to be on to see it. So based on the high that you see, that's it. Like if you see a solid high in the market, you see a solid low in the market or something like that, based on whatever highs and lows that you see, then you look left. and you look for that structure, that order block, or that hidden base. So meaning, where did my chart go? Okay. Meaning that, say like if this is the high that I'm looking at, and I need to look left, and I don't see an order block or an area that makes it make sense, then I better keep looking left until I do. And like I said, this one came in the form of a hidden base. The market was really consistent, making higher high, higher low, 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 higher high, and until right here. Higher high, higher low, lower high. Higher low, then it kept going up. Like something got off right here. So then there's my order block. It's hard to see, hence the word hidden base. If it's hard to see on the 5 minute, then you change your time frame. So what time frame you should use, it should be whatever time frame is easiest for you to see. What you need to see, when you need to see it. That's all. Right? Let's go look at a different example. Let's look at one of the ones down here. Okay, so like here, like I see, look, so let's go to the 5 minute. Maybe I'm on the 5 minute, right? And I see my high. I see this high sticking out like a sore thumb, right? So from the 5 minute perspective, I'm like, bet, there's a bunch of sellers right here on this high. Cool. But do I really see the supply area? Like, am I really about to mark this whole thing out and call this whole thing supply? Like, is my analysis refined enough to see this high based on this time frame? So it's up to you on how you want to go about it. You can stay on this time frame, and like I said in the beginning of the video, you can use some candle range theory and be like, bet, I know sellers are on that wick, and if we break and close above that, then I just need to tap that bitch and get in, pause, right? Or if you need to see it like this, and you need to see the structure, then now you have a more granular perspective, because it just so happens that the 1 minute is clean here, right? Then after that, if you want to take it a step further and you want to be like, all right, well now I want to read the candles, then now you can go down to the 15 minute or 15 second. This is not a general rule of thumb. This is only what I'm doing because this is how this area pans out. If this area needed me to refine down to the 15 minute because I started off on the 1 hour or the 4 hour, then that's what I would do. So it depends. I don't have a recommendation on like what time frame you should use. It all depends on what highs and lows you are witnessing. So for example, let's just go to a higher time frame because we haven't did that. Here's a 1 hour. So, and for this, it'd probably be better to go to gold. This is what I was marking out. It's gold. Damn. Then okay. So anyway, I found it. It was gold. I thought it was NQ. Okay, well same thing is here on gold. Okay. What time frame was I on? Was I on the 15 minute? Okay, whatever. So point is that what I have marked out here is still all the same stuff. Okay. It's like here, so we don't get confused, because these are just wicks, right? But I already taught you about rejection, right? I already taught you this is sellers, this is buyers down here. But for supply and demand sake, watch. If I want to figure out why is this high here, All I gotta do is go and look left. Mark that out. That's it. That's it. That's it. That's it. Like, that's it. That's really it. Nothing left to do. If I want to go and figure out why this low is here, look left. I already know it's right here. That's it. Oh, this is hard to see? Bet. Scale down. 5-minute chart. Can you see it now, Mr. Krabs? Bet. You feel me? So that's all you do. That's all you do. You see a high and a low, bet. Look left, mark that shit out. Boom, look left, mark that shit out. Now you wait. You wait, because what does this mean? It means this is sellers, and it means this is buyers. So what you gonna do with all that junk inside that trunk, except wait for, you know what I'm saying, wait for this shit to flip? That's all you can do, because guess what, if it don't flip, then we keep selling here, and we keep buying here, and we keep consolidating. So you wait until the shit flips. And then just like when it really does flip, you're gonna know, you're gonna look at this, you're gonna be like, okay, indication above the supply, correction, okay, cool. And price made a higher low, that's an increase in demand, shout out to Roe. Now, hold on, retest. No, hold on, wait a second. Yo, this shit about to buy. And you know what I mean? It's you can see it. It's right there. Okay. Now, watch this. What else was I about to say? What else was I about to say? I forgot. I had it up here, but I think I deleted it already. But whatever. So, for example, same thing. It doesn't change. I have some highs right here. Well, why are these highs here? Look left. All right, cool. Don't second guess it. Mark that out. Boom. Call it a day. Right? Who is in control here? Sellers. So then cool. Oh wait, everything just got flipped. So now, sentiment analysis. What do you expect can happen here? If this is where sellers are at, and we've already broken it, this right here is going to tell me who really pays close attention versus who just pays attention. And then we understand that this is where sellers are. What do you think can happen here? Price got a lot of different paths it can take. Right? This area has already been played on. So guess what we can do with this? Delete it. This high exists. Why? Look left. And that's where I started marking out other stuff, other nuances. You understand that sellers are here. And on top of that, you understand that this high only exists because of what, everyone? Supply and demand. So where is it? There it is. Because it was a bullish order block. Then we went above it. Then we retested it in the moment. Then we came down and retested it again. Then price failed to go higher. Then we came back crashing below it. Then we retested it as a resistance. Duh. This little thing, these little areas right here, for some reason, like this is what was responsible for all this, for this pivot zone. For this support, resistance and all that going on, okay? But you also just understand this basic Wick sauce perspective too. So if we're looking at this, multiple things can happen. Price can start to range up here because we just took some sellers out. But now some sellers are tapping in. And these two things are quite close to each other. So price could start ranging right here. So that's one scenario. A lot of people are going to think that price is going to come back. And this is what the majority of traders are going to think. To be honest, this is what the majority of traders are going to think. Then you have those few people who are going to suspect that price is going to come all the way back down and keep going. So now my question is which one are you? My answer is I'm none of them. I have no interest. I have no vested interest. I do not care what's going to happen at these areas. That's what I'm going to do. I wouldn't be trading none of this because I'm aware that price could consolidate. Sellers just lost. So you think buyers aren't going to try? Of course they're going to try. They just lost. They just lost the high. Of course they're going to try. So now we need to see if these sellers can hold. So market going to consolidate until a decision is made. Oh, and look, that's just where we are at. So this is current price. Ain't shit to do. Because what is this called? Side calls this a no trade zone. You know? So, but what could you do? Imagine if you had a good understanding of supply and demand and you knew that you could just low key. Ta-da! And you could just rate this. That's a bad term, my bad. You could just, you know what I'm saying? Sell here, buy here, sell here, so on and so forth until we figure out what direction we're gonna go. Okay? It's never been about market structure. Like that's the misconception. Market structure. Highs and lows. Bro, like it's never been about that. It's always been about supply and demand, bro. So now, literally, I ain't got nothing to analyze except what's on my screen. Because I don't take, you know what I mean? Like this is not me. I don't go up here. Personally, this is just me. Like, it's just me, but you can do it. You can do it. You know what I'm saying? No one's saying you can't do it. This is a low. You just have to have a different set of eyes, low key, to really figure this stuff out. I don't like the 4 hour, bro. Like 1 hour and low key, I would say 6 hour chart, 12 hour, 6 hour. I stay away from the 4 hour for personal reasons. So it's like, okay. And the 1 hour is going to give me the details anyway. So if I want to figure out like why this low exists, then I can just look left and I see, okay, bet it's inside this wick. Watch. And this part isn't being recorded, so if you're paying attention, great. Boom, I mark out the low, right? Then I go look left. I click control on my keyboard. I scroll my mouse wheel in. Okay, some of y'all need to learn how to do that. Then I say, okay, you know what? There's a lot of buyers right here. Low key, I'm good enough with that. But if I understand that this is still market structure, this still bottomed out because of some type of demand level from the past, I see it on my chart without having to like, you know what I mean? What what am I trying to say? Without having to scale down. But low key, I'm on a 1 hour chart, so I would scale down because this area is not refined enough for me. So let's do that. What I would mark out if I was forced to stay on this time frame, I understand the market went up, made this high, made this higher low. This is a lower high, and there was some type of interaction that happened right here. But then I'm understanding that, well, that doesn't explain my low. But it might explain the candle close. So let's just see. Let's just see. Like, we'll mark it out. It's going to tell me roughly where to look at once I scale down. That's the point. Since I'm on a 1 hour chart, the aligned time frame is the 5 minute. We go down to the 5. Then we going to look. So now, keep in mind what I'm looking for, right? I'm looking for two different things now. I'm looking for okay, let me add this. Where is it? All right. So I'm looking for this line here, which is my low all the way back over more so in recent price action. But I'm also now looking for the low of the area of rejection that we're in. Because what do I want to get? I want a very full, like I want to actually get the range responsible. And the only, and I can't base my analysis if I don't find it. You know what I mean? If I sit here and I have this wick marked out, and I don't have what explains that low, then there's something about what I'm looking at that's a little off. Now, as we can see, the top line for the most part, and this area that I did mark out from the 1 hour, it does explain the candle closes. Does a great job at that. But now look at what explains this low. This area of demand. Why is this area of demand important? Because look at the downtrend. Like this is where the sentiment part kicks into play, yo. Sentiment. We were bearish right here. How do I know we were bearish? This is the last area that was made before the market continued down in a significant manner. And look at where it overlaps. We were bearish, we closed above, we came down, respected that. So this is the supply area that got flipped. And this is the new demand area that got created. So this is the fresh injection of all of the buyers in the market. This is from analyzing sentiment. So I can mark this out either way, and look at how my zones, they give me an area to like start to look at. So if I want to mark out this, I can mark out this. If I want to mark out this, which is honestly what I would elect to do, because it's technically still valid, and it's the most accurate piece of information I have. Right? If I mark this area out, this area has already got taken out. New areas have already been created. So I update it to just reflect this is valid, and it's still current. All the way from March 29th. Which is really just, is that? Yeah, that's not even, about a month ago. This area is technically still valid. The low, it didn't close below it. And this is the area that explains this piece of market structure. I can delete that. And now I didn't just chalk it up to like the rejection of the candle. Okay, I didn't just chalk it up to that. Go back to the 1 hour. I didn't just chalk it up to the rejection of this candle. I went and found specifically the range responsible for everything. And that is, if you want precision, that's how you find it. Boom. I can delete the price line because now I know that I have the area responsible for everything marked out. And my levels are going to be accurate. If and when we actually find ourselves breaking this area, like I know, okay, we're not just breaking a low. Nah, nigga, like we are breaking the area responsible for all these buyers that's trying to keep the market propped up from this area where of demand. I have it specifically marked out. There's no guessing about it. Why is there no guessing, Romel? Because the market structure was already made. So I didn't have to go and predict it. It's there. It is the area that matters. Why? Because it already did matter. So now I just wait. I can leave this marked on my chart forever until we break it. Y'all picking up what I'm putting down? You go analyze the thing that you're putting weight on and figure out what happened in that same area in the past. And then you keep doing it until you find the supply or the demand that matters. That's how you find accurate zones. The higher the scale, the more work you need to do. The more like the smaller the scale or the more in the moment it is, the less work you need to do. Okay. So there's nothing left to talk about. Like this is it. This shows me the low of everything, and even here on the 1 hour, boom, the supply area is still there. This demand area. Look, I have the demand marked out. This isn't. Someone's gonna sit here and be like, oh, that's why. This is the reason why the market is stopping right here. Me, I understand what you're getting at, but no. Because now, like, the perfectionist in me is going to be like, explain this. Explain the overextension to me. Oh, well, that's because it's a candle closes are important. All right, bro. You know what I mean? No. It's rooted in the truth and nothing other than that about what determines price. Like I said, supply and demand is not a theory, it's not a concept. It's literally the thing that determines if price is going to go up or down. The last thing you need or the last thing you could benefit from, like I'm saying, is just a little bit of color coding. Is it a bearish area or a bullish area, and that's it. If I sit here and I just mark all this stuff out like this, and this is the extent that I do, great. I have what I need to have marked out, but now it's like I'm getting lost in the sauce, aren't I? Or I could get lost here. That's why it's important to see color. Right? Like you're looking at this and it's like without the color low key, I would be thinking, all right, well, it makes sense for price to come down here. I'd be trying to take some shorts. I'd probably be getting fucked up. But now that I have a little bit of color in my life, wait a second. You know that little white boy meme? Like, wait a minute. Oh, makes sense. I understand why buyers are buying here. Imagine going to school, bro, and you got 5 subjects. And your folders to every single subject is the same color. Bro. Like, I would get so tired of having to pick up and sift through which, okay, wait, is this science? No. Okay, this one. Nah. This one. All right, bet. Bro, just, you know what I'm saying? Damn, there go that damn mosquito that's been biting my ass for the past 5 days, bro. Nigga's still alive, just, bro. Hold on. I missed him. We were bearish until we closed above that. And then we were bullish. Gives you perspective now. Tells you what could happen. Tells you where are areas the market could reasonably go to based upon how they react to the current areas of supply and demand they're trading in. It's that simple. So it's like, hey, can we come down here? Hell yeah. Will we come down here? Maybe. Well, what has to happen before we come down here? This area of supply, which is now demand, and giving buyers a reasonable, giving buyers a reason to get into the market. This has to get taken back out before price can come down here. Oh, thanks. Thank you, supply and demand. It's that simple. If you know technicals, you could be getting tapped into sells this whole entire time because you understand this right here is a bearish range, and as long as we don't close above the bearish range, we're going to keep fulfilling order flow to the downside. And where is this high? Like how can you get tapped into this trade? Like this. I mean, well, technically speaking. By coming here to this downtrend and simply marking out the lower high and the lows that it broke. However you want to do that, like whatever. The high and the lows that it broke. Calling it alpha and omega because it's alpha. It's the first set of lower highs and lows that got broken. That's it. That's the extent of the technicals. And then, boom, now you know how to find where the highs and the lows are going to be as long as order flow is going to stay fulfilled. Ta-da. Cool. Right? So this is how you predict the high. But now, what if this high was already here? You would still do the same thing. So now say if these highs were already here, you would still go look at the high and then look left, and you would still come to the same conclusion. You would still come to the same conclusion. And you'd have that area marked out, and you'd still be sitting here waiting for what to happen, for that area to get flipped if it's gonna buy. But you start to learn a thing or two about order flow and about some of these nuances, you'd already know what direction the market is likely to head, especially if you know that in these areas where what am I trying to say? In these areas where bearish up there and bullish down here. So there's my area that I'm telling you to mark out. Either you predict it or you wait for it. But then now here's the fib. There's the 618. Like there's the what do you call this? The 236. Like, you know what I'm saying? It's just right. It's simple. Now granted, how big is this range? Is this a profitable range? Like, yeah, you can make some money in this, but I wouldn't be taking the little small trades in between. I'd really just take the extreme ones because it's market choppy. But yeah, that's it. And then you wait. That's all. It's really simple, bro. No, bro, I'm trying to get this damn mosquito, bro. I done clapped my fucking hands off, bro. How did I miss it? How did I miss it? This nigga been. How did I miss it? Oh my gosh, it was right there. I'm so glad my camera is off, bro. It was right there. That nigga has been biting the shit out of me, nigga. I'm sorry. It's not good for PR. So anyway, supply and demand and sentiment. I'm just talking in circles now, bro. I don't got nothing else to say. I'm bored and I'm lonely. So I'm just talking to y'all. It's 8:30 p.m. It's almost midnight on the East Coast. Like, you know what I mean? I ain't got nothing else to say. I am the supply to that mosquito. Bro, yeah, oh God. So hopefully this provided some insight. And let's talk about it. Bro, it was right there. That's, oh my gosh, that was the most perfect opportunity. Oh my gosh, bro. I already know he gonna get it back in blood, bro. I'm gonna be sleeping. That nigga just gonna bite my ass over and over. You like, haha, you should have killed me when you had the chance, nigga. Bro, I'm already knowing, bro. I'm about to go. Nah, bro. See, it's moments like this. I'd go sleep in the car tonight if I had one. So deep. This one. Okay. Me calm down. I can start this uploading. I don't know what to call it. 4-30-20-26. And you start fucking around with supply and demand enough, you'll literally run into all of the areas of confluence that I mark out. You're gonna run into Holy Grail. You're gonna run into BIR. You're gonna run into Mandalorian. You're gonna run into Wick Sauce 1.0. Like you're gonna run into every single zone that I have ever talked about, because every zone is a supply and demand area. Literally. You're gonna just naturally find yourself running smack dab straight into it, as opposed to like trying to find it. You'll be marking it out. It won't be before the high happens though, but it'll be afterwards, and then you can go back and replay and maybe go back and reverse engineer it. But I mean, like, if that's not really important, I mean, that's only really important for ego. If your goal is to try to be the best executor and blah 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 market participant that you can be based on like based on executing at like the highs and lows of trends, being able to do something that most people can't do, then like sure. But if you just want something like consistent, rinse and repeat, safe, with like some type of confirmation, blah blah blah, keep it simple, market structure, and the areas that made market structure, this is really all you need to do. And then it's like, what's the next best thing to add to this? Literally, the next best tool to add to this is a fib, right? But I've showed you some creative ways to consider these, right? Yes, ranges and whatnot, but it's about the supply and demand areas that get made, or at least that's how I would use it. Like I'm not drawing I wouldn't draw it from like high to low or low to high. But that's just me. Like, and who am I? You know what I mean? But I would definitely draw it like this though, like perhaps, or whatever the case is. Like I don't know, like probably like this. Yeah, from the area that created that to the low. And then, okay, bet it was time for us to break out. So we did. And when we broke, we came back to, correct and retest the supply that got created before we broke the lows. And it's like, boom, now there's another area there. There's a fresh area we can mark out from now this high of supply down to this low demand. And we can just be doing this back and forth or whatever. The reason why I tend to like 50% a lot is because you do get that interaction sometime where it's like, Yaga, taps 50. You know what I mean? And you got a lot of confluences there. So never negate the power of, what do you call this? 50%. But then, if you draw it from other areas, then it's like, all right, then you're going to want to, like use this stuff accordingly, or however this is gonna go, whatever. I don't know. Yeah. So whatever. I don't know. But yeah, just supply and demand areas. That's really it. Need to upload this video. And I'll post it at some point. Tomorrow's Friday, so I'll post it up for the weekend, and I'll probably leave this one up. I don't know. I'll figure it out. Who knows? I haven't been monetizing my videos. I don't know if you guys have noticed that. Like I haven't. Like yeah, I have a $9.99 paywall, bro. It's $10, and it's not even per video. It's a 3-hour course or it's a 3-hour lesson, but it's like that's me not wanting to just make my video public at least for a long time to people who just don't really care for me, or people who I know like just literally like disrespect me on a day-to-day or literally on a week-to-week. Or whatever the case is. So in return, I don't put ads on my videos. I would make more money if I put ads on my videos. And in the future, I will. Like videos that I'm gonna leave up public, I'm gonna put ads on them. But it's like I don't put ads on the videos because I mean like a 3-hour long video, bro, you're gonna have like 40 ads. So that's kind of annoying, And I'm aware of that. So since I don't want to interrupt the learning experience as you're sitting down watching the video, it's like I don't put ads on the videos, but to keep my channel, I guess, profitable. That's just the workaround. So it's like a win-win-win in my eyes. But I'll figure out that going on later. But this is gonna take hours to upload. It's not gonna be ready anytime soon. But when it is, here is the link to the video. You can save this for your viewing later. And I'll add everybody later on, maybe tomorrow or something like that when it's up. But there it is. All right. Yeah, I'll be smooth. Bro, that mosquito is gonna turn me out in my sleep, bro. I'm already knowing. Pause. All right, bro. I'll talk to y'all. I don't know, maybe Sunday. I don't know. Sunday, Monday. Figure it out.